brief introduction. Good afternoon, everyone.
Good afternoon.
As briefly introduced, I would like. Hello,
Ah,
madam. Can I start?
Sir, your voice is cracking, sir.
Is it better now?
yes, sir.
Shall I start? Everyone able
Yes,
to
we
hear
can
me?
hear you.
Yes, sir.
Yes, sir. Yeah,
Uh,
you are
Thank
audible,
you.
sir.
Yeah, thank you. Good afternoon, everyone. Thank you, madam, for the brief intro. Uh, Today, I'm going to discuss about voluntary liquidation, one of the specified chapter under the IBC. I know it's a kind of a niche area under IPC, and I thought I will go through whatever practically I have experienced so far. I'm practicing for the fourth year in the IBC as IP, and maybe my journey can be shared with everyone. And with, of course, I want to go through the income tax, certain provisions, and also certain other law related to the voluntary liquidation, what my experiences were so far. And also, I want to read through the Bear Act and the rules, one by one. Maybe I thought that's the way in which we can learn. So my idea is to give a brief intro to the subject, then get into the law, just go through each of the provisions, what we need to do. Then I will overall cover the process and the steps, practically how we have to plan or execute the work, and that's where we can wind up the overall topic. And in between any questions, happy to take and answer all those. So why particularly voluntary liquidation, right? So when I qualified as an IP and met couple of seniors over in Bangalore to see how this industry works, to understand well, right? Because before taking the assignment, I heard so many things. A couple of good things, couple of my seniors has taught me was, see, this IBC is a process. You have to decide whether you want to become like a Abhimanyu or you have to become like a Anjaneya. Abhimanyu, went into war. IBC is a process where you enter, you can't come out, that easily. You have to enter, fight, and win the battle. That's how the process for the insolvency professional is all about. And you can't become Abhimanyu. It has to be like Anjaneya because he's the one who entered to the mouth of the demon and become big, killed her, and went up to the Langa and created a history. So that's what the insolvency professional talks about. So I felt it is better to be in a simple area of practice. That's one among is voluntary liquidation. But over a period of time, my journey taught me so many things, and I felt voluntary liquidation is also not that simple case what we feel. There are so many complication challenges we have to look into it and take up in our career. And thankful to the IBBI and all the institute process, learned so many things. So that's what I'm going to share. And also before that, want to share a thought that uh, experience does not come with the age. Experience come with the damages. So let's share my experience with all my fellow friends, professionals, and let's start. So now, the first point about, right, what is a voluntary liquidation? The basic point comes, what is this voluntary liquidation? We have so many chapters or a different type of a liquidation, where company is bankrupt or a company is unable to meet the certain debts. Then they get into the liquidation through the honorable NCLT process. We have a different chapter that is under section 59. There is a topic about voluntary liquidation. So in short, if a company or an LLP, this applies to both company and LLP. If at any point of time a company or a LLP is solvent, that means they have a money in the account, they don't have any debt due or any litigations are pending. In other words, we call it as solvent, can eligible to go for a voluntary liquidation. So the company or LLP who want to close their business or close their operations, close their entity, the one of the mode to go for a legal method to wind up the company is a voluntary liquidation. So before anybody gets into the voluntary liquidation, they have to give a declaration that they have a sufficient assets to meet the liabilities, or sufficient money available to meet any debt which arises at the later stage. They can get into the liquidation process. Now, under the section 59 of IBC, the first line starts with a company or a LLP which does not have any default can get into a voluntary liquidation. Under that section, related to that section 2, defines what is default. Default largely says any debt which is not paid or capable of paying. That means there is no default. Such a cases, a voluntary liquidation can be initiated. So as it's a voluntary liquidation, that means I don't require to go to a NCLT from the day one. So what I do is I only take my board followed by shareholders, and the in case of an LLP, the partners consent as per the terms whatever written in the LLP agreement. I follow that due process. Then I get into the liquidation process. If I remember correctly, when IBC is introduced, and the one of the option was the fast track liquidation. Honorable finance minister had stated that this is one of the easy exit to the lot of investors. So this is how the voluntary liquidation came into picture. So it gives a quick exit from the business to the owners from in a legal manner, and that's what the voluntary liquidation is all about. So it's a basically structured, legalized exit mechanism available for the business owners without getting into the any other further detailed process. Now, the question comes, why do company opt for a voluntary liquidation? And obviously, like as a professional, when I see the process, how I will get an assignment, where I have to get an assignment, or why people will go for a voluntary liquidation. As everybody knows, we have a various mechanism to close down our company. Something like we have option like a strike off. We have another option, uh, under the Companies Act also for a liquidation. That's called winding up. Or you can do a slump sale, close down the company eventually. But why people opt for a voluntary liquidation? So when I see in my experiences, I classify the type of companies, right? What we have is private, public, listed, limited, unlimited, all those companies. But largely may not be a public company. I have not seen, only some government companies I've seen recently opting for a voluntary liquidation, whether they fit or not secondary. But largely private limited companies, if you see, they are getting into a voluntary liquidation. When we among the private limited, if we see small, small company, or other than small company, or a foreign subsidiary startup, this all are the classification when we make. First comes is the foreign subsidiaries. Obviously, foreign company comes and start a business in India. Largely they may be a cost plus markup business to the parent company, meaning they may be providing support service to the parent company, and parent company may get acquired in foreign, or they may sell the business, or that company also may get into a liquidation. So various reason, the Indian arm also needs to be shut down. So then the one of the method, because foreign subsidiaries, they want to take back the money whatever generated in India or made a profit in India. Also the currency fluctuation is also nowadays issue. So that is a one of the reason to take back the money. The foreign companies look for a voluntary liquidation as an option. And another point is, it's a quick way to liquidate the operations legally and report in the foreign countries, because in foreign country also they will have an obligation to make sure that their subsidiary or a arm, Indian arm, also closed legally. So that's why foreign subsidiaries, I'm saying, coming for a voluntary liquidation. uh, Somebody has raised a hand. Vaishali.
Will you please make the full screen and raise your volume of audio,
Okay.
because it is very difficult.
Now,
Yes.
so that is the reason why, to get a global exit and, change in business strategies, we see a lot of foreign subsidiaries also opting a option of a voluntary liquidation to exit from the business. And next, we are seeing the lot of startup also coming for a voluntary liquidation. The reason is startup, as you know, it is funded by various VCs or a investor. Uh, Again, startup exit is the method of valuation or the IPO or various method what they follow for a exit. But in between, when the startup feels, they are not able to stand up or grow the business further, they want to exit or take back the money or give it to the investor back. The another best method option available is voluntary liquidation. Generally, what I've seen is in startup, generally they will issue something like CCD or a CCPS sort of an instrument, and redeeming those or repaying those has a certain statutory restriction under the Companies Act. For example, if I want to CCPS to redeem it, technically not possible because it is a compulsorily convertible. That means again I have to convert that as optionally redeemable preference share, and also it needs under section 55 certain profit to be having in the company to the extent of face value of the redemption. If they don't have that, you can't redeem the preference share per se under a Companies Act. So then the legal option available itself is the voluntary liquidation. And also equity share capital, we can't give it back. Buyback, statutorily there is a limit of 25% of capital and reserves. And also you need that kind of balance available to repay also. A startup generally, they have a cash burnt already and may not have a sufficient cash available or a profit available in the books. So they have to take up the method of getting into the voluntary liquidation itself. Strike off may not be possible because they will have assets or a liability sitting in the books. So this is a reason why I am seeing the startups also coming for a liquidations. Then comes is any kind of SPVs. Many companies, formed as a special purpose vehicle like a joint venture entity. The object might have completed or the business might have completed to take back the profit and to legally close the company. The method available for them is also a voluntary liquidation. Then I've seen certain companies, they may not have much business or they may not have much money to repay to the
Special purpose vehicle is also a company, sir. Corporate.
special purpose vehicle is also a private limited or a public limited, whatever type they have registered. And they will also, there's a company, right? First is they are a company. Then we name it as a special purpose vehicle or a joint venture company as a kind of a name what we use in the practice. But they are by default they are a company or a LLP.
Okay.
Yeah. So other cases, what we see is the regular companies. They may not have they may be a small company or they may not be a small company also, but they want to take a method of going for a voluntary liquidation. The reason is in the strike off, I have a provision where anyone can revive me even after 20 years of my strike off. So that means I can be revived at any point of time. But when I went through the voluntary liquidation method and when I'm dissolved, the provision says I cannot be revived later. There is no provision actually. So company is dead forever. But interestingly, when we see the judgment or a dissolution order of courts, they say that this company is dissolved, but other authorities like income tax or anyone will have an option to prosecute the uh, company or the director in future if they found out anything done in a fraudulent way. So not sure how dissolution itself is clear way of exit, but currently as we speak the law says once you are dissolved you are done. There is no way you can check or go back on that company part. So this all are the reason why we see in the practice the company is coming for a voluntary liquidation. I am here saying company means it will include LLP also by default. So these two type of entity will come for a voluntary liquidation.
Sir, just a minute, sir.
Huh.
Sir, in case of liquidation, even if the company is dissolved under Section 54, any liabilities are there, it can be prosecuted up to 20 years after dissolution. In case of voluntary liquidation, if any liabilities are there, future liabilities I am talking, is it whether it can be prosecuted after dissolution under voluntary liquidation?
Correct. Sir, Section 59 and connected section or rules does not speak anything. They say once the dissolution order is passed, filed and registered by ROC, the process is complete. That is one side.
In case
Second,
of voluntary liquidation.
Correct.
Hmm.
And secondly, when we issue Form H or the final certificate, right? We, as a professional, we write, we have done, all the check. There is
Compliance
no
certificate, that is.
assets or liability left. That means we have to take a onus that there is no possible assets and liabilities are taken care. Correct?
Sir, I think, see, you have a claim process both in CRP and liquidation. If somebody has not submitted a claim gets automatically extinguished. Similarly, even voluntary liquidation, somebody has not submitted a claim, even after 20 years, nobody can come because there is the judicial process of claim submission and verification is inbuilt in even voluntary liquidation. So that
Correct.
answers this question, I think, if I'm right.
Yeah, that I'm coming there. So I do agree, sir, your point about the claim acceptance process and all. But whatever I see in Bangalore court, they generally write in the order that, other authorities or any person will have a liberty to come back to the company later if anything is found. That way they worded the order. But when we see the legally, right? So you're not given me any claim. I've given the public ad, everything properly. You're not given me the claim. And there is no way I can make the further payment if you're not given a claim. Secondly, practically also, there is no money left because I distribute the money, give it back to the shareholder. How we can recover the money? There is no possible way to recover also. So, and also if you see, if you go back to 1956 Companies Act and the dissolution available through the official liquidator route, you will find a lot of case laws where people, even after dissolution by the Honorable High Court through the official liquidator, many people have went to High Court, challenged that order, and made those company revived also. So if you can take that as a base, and even in the voluntary liquidation, Honorable Bench passes the order that the company is dissolved. But if you can prove that some genuine liabilities are left out, or it is done in a fraudulent manner to cheat somebody, or if there is a misrepresentation, I feel it's a fit case to revive the such a companies. Even though act is silent, I assume courts are driven by principle of natural justice. So should be possible to revive the companies. My view is.
I don't think so, sir. Then it is a dangerous proposition. Why would somebody go for voluntary liquidation? See, the lot of courts, Supreme Courts also laid down in various cases in during liquidation. If the valid claimant is there, if you have not submitted a claim gets extinguished. Claim gets extinguished once the order for dissolution is passed during CRP followed liquidation. Even and similar position also extends to even voluntary liquidation. If someone has to again face this music after 20 years for any claim which incidentally otherwise could not be submitted, then what is the point? What is the purpose of going through this voluntary liquidation and through NCLT route?
Correct. Sir, that's what current order, couple of court orders says. And also another way is, sir, what if there was a historical fraud, which was never.
Fraud, sir, always fraud will not to suppress the process. Definitely
Fraud has no
fraud
look
is
back
proved.
period, sir. Fraud
Fraud is
is
proved
different.
later than voluntary liquidator duty is to
Yes, yes.
see as one of the provision, voluntary liquidation provision. It says that all PUFE transactions has to be verified, and in the preliminary report also you will declare saying that are there any instances of where voluntary liquidator wants to get into the formation, promotion, and failure of the this corporate data. So I think that liquidator has to ensure that no, those things has been already taken care. There, if the some fraud knowingly and with the knowledge of the liquidator happens, and then if he has not taken care of those things, yes, liquidator will be held responsible.
No, correct. Suppose certain things, theoretically, right? Beyond the human judgment. Suppose I need to check last 2 years for a preferential transaction and all those things. Assume something happened historically,
Yes.
Which we may not be now. They might have, okay. Or see, I've seen a cases, right, sir? What happened in one of the case was uh, the VAT department had sent a demand notice to the company. It was sent to the auditor email ID because it was registered during that time. Nobody knew that there was a VAT demand in the company.
True.
Claim, everything was sent, meaning claim, public advertisement, everything done. Money is repatriated, no money left. some fine day, somehow that VAT department comes to know that this is under liquidation. They come after 6 months. The claim period, everything is over. And
They have
how
to
to
come during
handle it,
liquidation.
right?
Sir, they have to come during liquidation, file a claim. If they
They are saying, they have sent it to the company, whatever
that
registered
is
in their
that is
email
all
ID.
gone. See, before initiation of voluntary liquidation, any notices, let there be any notices. During liquidation, when a law recognized process of claim submission and verification is involved inbuilt in the system, if nobody submits a claim or if the record of the corporate debtor does not speak, because see, if the corporate debtor records are not updated, one of the duty of the liquidator to get the accounts updated till the date of voluntary liquidation commencement. Either it should get cropped up in that process, or the concerned department should file a claim. If they have not filed a claim, the rule says that if you are not vigilant, automatically you will not will be protected in the process.
Correct. Sir, and also, if you see when we start a liquidation, the company and the director gives one declaration that all debts, which is ascertained are capable to be met. And if any debts arises also, I will make it good. That's a
That is true.
solvency
So that is a
declaration what we
comfort.
give.
That is the comfort which the promoters while making inquiry into the affairs of the company, because they declare company is solvent. Company is solvent. So on the basic premise of that only, obviously that they will declare. Second, your balance sheet or statement of affairs, wherein assets and liability will definitely prove that what the declaration they are making, that company has a positive net worth to meet the liabilities. Over and above, if any liability comes, obviously promoters have to meet it. See, I had one occasion where FEMA non-compliance, the penalty came more than the assets which were available in the CD. Then in that case, we went back and got the voluntary liquidation cancelled, because liability is more than now. Because of the FEMA violation, the penalty which RBI levied is more than what assets are available.
Right. So in my case, sir, there is again a twist. VAT department does not give a claim on time. That is debatable. Second, unfortunately, to the existing bank account, VAT department had a lien. Meaning, if you remember long back, while taking a VAT registration, we supposed to give some fixed deposit as a lien in certain state as a practice. So my current account is linked to my VAT registration department. They are not removing the lien till I pay the statutory liability. So I can't close the bank account, existing bank account. I can't do anything, meaning I can't go to NCLT for dissolution petition.
True. Unless you recover all the assets, you can't go for that.
Yes.
I have
That's the way.
one.
So
That is
that's
the
where the another step.
That is the
I
reason
have one
the
classic
scheme
case.
provides an inbuilt system of taking approval of members and get the voluntary liquidation period continuously extended. If there is an asset, you have two options, sir. See, I had one case where I have taken a consent from the shareholders to extinguish that asset. I think.
Yes, sir. Yes, sir. Good. I'm listening, sir.
Yeah, Mr. In my way, one of the case, I had a TDS amount to be received from the corporate, from the income tax department. And because this voluntary liquidation is maximum 90 days and thereafter 270 days, I can't wait. So, what I have taken a letter from the shareholders that no, they are extinguishing that TDS refund. With that letters, I went to NCLT and NCLT sanctioned the resolution.
Recently, in one of my case also, uh, after after 1.5 year, after 1 year, I got a letter from income tax that you can't liquidate this company, and we provide some documents to me, and I have written them that as per 178 and 238 of 178 of income tax and 238 of IBC, you are supposed to submit your claim within 30 days, and you have not submitted. So my bank account is also closed, and I am on a verge of filing my voluntary liquidation petition. And then I've replied to them and I marked a copy to them also for that petition. And I requested them, if you have anything, you can come to NCLT and take your order accordingly. Because you can't prolong your liquidation proceeding on
Yeah,
such kind of letter from banks.
moreover, you have a deeming letter from the IBA itself. You need not wait for NOC from the income tax department.
Yes, yes, absolutely. There is one circular on that as well.
Circular
Yeah,
on
yeah.
that.
So it's very difficult to
And
get
even
energy. And
moreover, NCLTs are recording this fact that no, why IBBS circular NOC is not required to be obtained from income tax. They're recording the orders.
No, but there are few NCLTs, few benches are requesting NOC from income tax as well. So that's actually creating a problem for all IPs to pursue that income tax NOC. Otherwise, we are only supposed to submit our advertisement to them, or maybe even later to them. If you have any claim, you can come back to me within 30 days. Otherwise, as a IP, we should not be responsible for, and we should not be pursuing that NOC itself. But
Generally,
sometimes
generally,
NCLT
Yes,
is
yes.
NCLT is asking for income tax NOC. Even NCLT is asking for ROC report also, which is also not required somewhere. But it is
Yes.
prolonging the voluntary liquidation, and I think there must be some representation from IBBI to NCLT not to ask this kind of documents, which is prolonging the whole process itself.
True, 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 true.
generally, income tax will not give any NOC, sir.
No,
No.
I have received in one case. I'm
Mm.
not saying no to it. I have received in one case.
You
But
received NOC, Jigarji?
NOC, yes,
Mm.
Ramki. NOC I have received in one case.
But generally, they will not appear if there is no liabilities. But
Yeah,
if there is any liabilities, they will appear and they will file their claim
Yeah, yeah.
or
yeah.
report.
I think,
But they are supposed to file within
yeah.
30 days. Once you bank account close, once you disbursed all this money, I don't understand with whom they are going to claim and how
Yeah.
they're going to get money. So technically, it's all
How will we
prolonging
get money?
process.
Yeah.
Okay, sir.
So, so I
So,
think speaker has to continue.
yeah, sir, I will add couple of points. Thanks for this discussion. One, I think income tax very clear under the law. Once you intimate, if you don't receive a claim, I think we are legally bound to reject those. Or the act is very clear. IBC also overrides couple of provision of Income Tax Act. Given that their claim will not stand still. But as a good practice, my suggestion is are always better to write to them. And also it says to the assessing officer. So if a company is not just to one income tax officer, right? They have a assessment division, TDS department, or a transfer pricing division. Write to them, go to the, intimate them properly so that we are very safe. Uh, Secondly, in couple of my cases, I've received a NOC from the department. In couple of my cases also, their claim, later on, where uh, we have went to NCLT for a dissolution petition. When we went and told them, they've accepted our argument. They have not done anything further. And in Bangalore bench, what we see is income tax representative also usually sits in the hearing. If they have any objection or any amount payable, they generally state during the hearing time, and again we have to go back and check with the department if anything is pending as such. I have seen some cases where uh, people have paid even small amount of taxes. They have raised subsequently, and client had paid it and court had accepted it. Such cases also I have seen in Bangalore benches.
No, but
So
sorry to interrupt. But in such kind of cases, if after dissolution, if they are filing such kind of demand and such kind of asking money, which they might be legitimately, they have right to do it. I don't understand as a liquidator how you're going to give it, how are they going actually how they are going to get money out of this whole litigation. So who is going to be responsible to pay that taxes to them?
ideally shareholders, what I've seen is they have directly paid to the department because bank account everything was closed, and they have paid directly to the department from their India account or through the director's account, something like that.
So if shareholders and it.
As per me, yes, I think they may see the matter of the case. I've not seen any so far cases where honorable bench said, I won't entertain the petition. I feel if the liabilities are still pending, I think tribunal bench may reject the dissolution petition, because
Okay,
till dissolution is not done, company is active for all practical purposes. So I feel they will take that stand.
okay,
And one more academical point, right? For interestingly, suppose if during the liquidation, if income tax is not able to identify somebody or something, they still have an option to go back to the directors at any given point of time, especially for certain tedious sort of sections. So that
true.
because when I went to income tax for some matter, they were telling, in some cases, the company is dissolved. We have sent a notice to the directors now personally. So that was the some information the assessing officer were giving to me. So maybe that may be the ending the matter, right? Suppose somebody is not available. You can't do anything during the liquidation process. Income tax also has to close the matter at their end. Maybe for them, another way it is company they cannot prosecute, but they can prosecute the directors. That
Okay.
option they always have.
There. So they'll go after directors if companies, if they are not going to get money out of.
Correct, because 178, erstwhile 178, sorry, is about liquidation cases, right? 179, 80 onwards related to directors.
Yeah.
So they do still have a power. And also, till dissolution is not done, company is active for all practical purposes. So they still have a power to do it.
Yes.
And also depends upon the each officer, right? One officer may take this stand, another officer may take a lenient way. So not sure. But in the law, if you have intimated properly and department has not came back to you, technically nothing can't be done.
That's true. Well, that's what my reading also, that one only. So I've responded to income tax department that my account is closed and I think nothing left with me. You can go and claim from appropriate authority. That's what I have written to them because I can't go beyond that.
Correct, sir. But again, the tax default also we need to see what kind of default. Suppose if it is
No,
a
but
corporate
actually,
tax.
to be very frank, they have not sent me a claim also. They are just asking a documents to me and they wanted to find a claim amount. It's just
No,
a teasing because I was following up with them for a NOC. So they thought, let's screen him and take some time from him. So that's what I find in my case. Because I have not received a claim at least. They have not said me that we are supposed to have a claim of 5 crore or 10 crore or 50 lakh rupees. They just asked me a document that you can't simply close this company through voluntary liquidation. Please provide me all this data.
uh, sir, may be correct. It's like a chicken egg question, right? To
Yeah,
file a claim, they have to do an assessment. They cannot just
correct,
best judgment basis that they can't do.
correct,
Assessment again, subjective. They have a 8 years time or a 6 year time, various
correct.
sections,
Correct,
various
correct,
cases.
correct.
So unless
Sir,
they
your
do
voice is not
assessment, they
clear. Your
can't file
voice
the
is not
claim.
clear. Yeah.
And if you have to, under a law, now,
Now it's better. Yeah.
yeah, so under that section, right, if you see the subclause 2, I believe, it
Yeah.
says without a, if any officer in control of the asset of the company, without the leave of income tax, he cannot distribute the proceeds to the shareholder. That's how
Yeah.
that 178.2 or first provision says. Maybe using that section, they are letting you know that you don't distribute money till we, verify everything. Maybe
So, but
that is
my
the
case is
idea.
completely different because the day they inform me, that day my account actually closed. And before that, I have reminded them 3 times that if you have anything, you just let me know. But they have not informed me at all. And the moment I've closed my account, I've closed my liquidation proceedings. That day they wrote an email to me. Next day I replied to them, "Ki already I've closed my account and already money is distributed. So I think I don't have left anything with me. So you can apply appropriate authority. Otherwise, it will never ending process because some way IBBI says that the liquidation should be completed within 90 days or maybe 270 days. And here people are sending a letter to us exactly 1.2 years later. So technically, it's not ending process.
Right. Yes, sir.
Thank you.
Thank you, sir. Next. So any other points? I will move on to the next try. Next.
Sir, I have a question here. Whether in the process of this voluntary winding up, the liquidator, the liquidator appointed over here, he has any duty boundness with respect to identifying or inquiring about the earlier transactions, whether they were conducted with an intention to defraud the creditors, or there were any cheating elements which were included in the operations of the company earlier, whether he is duty bound to do that,
Correct.
or
Sir,
his duty is getting restricted only to act as a liquidator.
Sir, if you see our section 59, I think the last provision somewhere says it is governed by from section 35 to 53 or 54 also. That means section 35 to 53 onwards, if you say, it is related to largely that preferential transaction, fraudulent transaction, all those things. So we are duty bound to check historically, is there any wrong made? And if there is any such wrong made, we have to report to the IBBA also in our preliminary report, followed by we have to take all such step to recover the money or make those things good. So in short, we are duty bound.
Those are all called as the pay transactions.
Sorry,
Pay transactions.
preferential fraud, all those things, sir.
Yeah. Pay transactions.
Sir, before start
Shall-
of voluntary liquidation, we have to give any consent form, sir? Is it not?
Yes, sir. Yes, sir. We have to give the consent to the company, and also that consent also we have to file in IBBA, that IP1,
As per
that related form.
as per Act and regulations, there is no form prescribed. That is why I'm asking you, sir.
No,
Nowhere it is there in the voluntary liquidation. The
No,
forms
but-
prescribed for voluntary liquidation to give the consent.
within 3 days we have to submit, no?
Correct. But sir, when you see the IBBA login and the guidelines, the IP1 we have to give, sir. Because or else, on what basis board can appoint me?
Sir, company on its own, they will appoint as per the Act. There is no need of formal giving consent by the IP to act as a liquidator. Where it is mentioned, you have to give in this form consent like that. Is it mentioned in regulations?
No, that is not mentioned.
Is it mentioned in the Act?
No.
Is it mentioned in rules? There is no rules for voluntary liquidation. Isn't it?
No.
How they will appoint?
No, Mr. Kapuri.
Sir, I think in this case, an engagement letter, which is
Engagement
basically
letter.
signed between the liquidator and management would be good. This is also to
Engagement
keep on the
letter
record
by the board of
as
directors.
an engagement letter that can be given by the liquidator with his terms and conditions and scope of work. And it is more like a consent for acting as a liquidator. The same thing can be uploaded in the form IP1 as well. That is the usual typical practice which we follow as a liquidator.
Correct.
They will give the engagement letter.
They can give, or we can also prepare with the standard scope of work, with all the duties of the liquidator, starting from public announcement to obtaining the dissolution order. And you can also put, sometimes I am putting the scope limitations also. I am also putting clauses, legal clauses on limitation of liability, indemnification, etc., etc. That itself can be used, signed by both the parties and uploaded in the form IP1.
Okay, sir. Thank you.
I think somebody said, Mr. Ganesh was saying with the limitations of liability and whether that kind of limitations liability while giving your consent and acceptance will sustain during in the voluntary liquidation process?
I doubt, sir. I think maybe he's speaking about limitation in the sense his scope of work.
Yeah, because when law is imposing certain duties and responsibilities, as long as you are expected to discharge them, I don't think you can claim any defense for that. And if you are not,
Maybe something beyond his expectation, right? Anything like he tried all best, as a IP, and
yeah, that is enough.
over
Sir.
and above something comes, maybe then they have to
Over and
come back
above,
and
obviously,
compensate.
you will have your own defense,
Yeah.
but can you define your liability limited or restricted beyond certain point? Is something. At the most, you have to justify and defend yourself. If somebody, some third party and claimant is coming and trying to impose liability on you.
No, maybe see, this is a liability which arises during that liquidation process, right? After my appointment.
True.
And any liability beyond my expectation or control or certain event, any issue happens, you should not come back to me as a company. Suppose the dissolution gets cancelled at a court level for certain reason. I did everything best, but it gets rejected. Now, you may expect some other liability, right? Uh, because your company becomes active now. You may need to file historical return, all those things. So then I'm not duty bound that. If
Sir,
court
I
rejects,
was talking about professional indemnification. There are cases where management suppresses some information before the start of the liquidation. Suppresses as in something small. Like in one of my cases, there was a lien exercised on the existing bank accounts of the company by the police station. That was not revealed either in the declaration of solvency, nor was the liability they were able to quantify. It was accidental, not purposeful. But tomorrow, for any reason, the liquidation process gets delayed, or there is some charge on the liquidator that has to be indemnified by the management because there is a misrepresentation or the information has not been shared in that level of detail. That is what I meant when I talked of limitation of liability or
I think that
indemnification.
makes sense. That makes sense. In that
Yeah.
sure. So moving on to the next point. So we have briefly spoken. So why not a strike off as an option? Why one has to go for a liquidation or a voluntary liquidation? So largely why people go for a voluntary liquidation is when they have a why people go for a liquidation is when they have a money or a money payable to the shareholders. That's a large reason why people will go for a voluntary liquidation. In certain cases, I've seen many foreign subsidiaries or companies, right? They want a very cleanest method of dissolution.
देखिए
So,
क्या
so as I said, the cleanest method of dissolution will be under IBC because you are following so much of process where you don't have a risk of revival tomorrow, provided everything is followed well. So that is one of the reason people prefer to go for a voluntary liquidation. Another one is in strike off. You have a condition where the company should be inoperative for a period of 2 years. So somebody who is not don't want to wait for 2 years and keep filing the return, for them the voluntary liquidation is an option to go for a voluntary liquidation. Another one is I've seen some cases where the investor wanted to claim a capital loss properly. They don't wanted to strike off option, wait for 2 years, close down the company, get a strike off order, then claim the loss as such. So they said we want to go through the court route itself so that all those losses or the things are taken care. So that is another reason why they have opted for a strike off option. They have opted for a voluntary liquidation option. So this all are the reason why we see why people go for a liquidation than a strike off.
Sir, is there any requirement to file indemnity also, as in the case of a strike off was required?
Strike off, yes, it is prescribed under the act. They have to give affidavit and indemnity. And in case of liquidation, they give only solvency declaration. It is not detailedly like indemnity bond what you issue in strike off, but here also in liquidation some declarations are given
relating to the future liabilities if arise.
They say as on the date there is no liability, and also the director will say that any liability arises, we will make that good.
Sir,
We also,
Sir,
should I speak?
sir, I have
Yes,
a
sir, tell me.
question to place. Shall I? हाँ, so just I was just asking, just a declaration of solvency में, directors give the declaration that if any liability arise in future, so we will make it good. Sir, in a case, अगर जो liability department से demand वगैरह arise होती है, it is मतलब like 3-4 times of the funds that are available in the company. So in that scenario, what is going to be the case? Supposingly, the company has already filed forms with the ROC, and on the master data, company as on date is under voluntary liquidation, and the petition is yet to be filed with the NCLT, and somehow the company has received a demand notice in which the amount is 3-4 times of the available funds in the company. So, sir, what is the What is suggested in this case?
Voluntary liquidator has to go to NCLT, cancel the voluntary liquidation process. It has happened in one of the case.
Madam,
Because
first,
now no more CD is no more solvent now. And a presumption that CD is solvent and 59 route has been resorted to. Now since the demand has come, if the demand, if the liquidator finds the demand is genuine and correct, then CD becomes since not solvent.
Madam,
Yes, yes,
I think
yes.
sir has answered it briefly. So first,
There was past case laws where NCLT cancelled the voluntary liquidation process.
So, sir, there is any scenario in which a voluntary liquidator can withdraw this voluntary liquidation process because there is no mean of taking it forward to the NCLT as the demand is there. So, like,
Madam, with this
hmm,
Amendment
hmm.
Act, right, you have an option to withdraw the petition with the shareholder approval. Now that
Yes,
is
yes, I have
clearly
also
written.
gone through it. So,
Yeah,
yeah.
that is clearly written.
Hmm,
If it is erstwhile, prior to that cases, right?
hmm,
You can even ask for a withdrawal petition also.
hmm,
As sir said, there are cases, in some cases where they filed a liquidation and
hmm.
later on they wanted to revive the company because they wanted to continue the business.
Okay.
So in such scenario also court had allowed the withdrawal of the petition or a cancellation of the petition. And first, madam, in your case, first you have to ascertain whether this claim from income tax or some other department. Please
Hmm,
see if it is from Income Tax Act, read the section 178 of the Income Tax Act. If the claim is not received on time, you have an option to reject their claim. Fight before the court. If it is,
okay.
it's a simply some demand notice is sent without looking into the books or anything as such. And other department also, if they are not submitted a claim on time, you have an option to reject their claim, provided if was historically some fraudulent way tax were not paid or some mismanagement were done and tax is genuine, then maybe
Hmm.
it is better. Anyhow, they have to compensate these taxes. If they are not willing to do or if they don't left with any money, the withdrawal is the best option.
And sir, what if in this I would like to take the matter forward. What if the scenario, if the company opts to go for the petition in a high court or supreme court against the department that they have received of so much of the demand, so simultaneously there is a timeline in the voluntary liquidation as well of 90 days, and then you have to proceed with the filing of petition with the adjudicating authority. So answer the matter obviously with high court and supreme court is going to take time. It's not a matter of a day or 6 months that you will see a judgment. So if this gets, it's going to be way ahead, like it can either take 2 years or 3 years, we are not sure of. So sir, in that case, in this scenario, can we ask for time from NCLT that we want to keep this matter on hold as the one of the matter is with the other authorities and we are waiting for its decision, like what can we exactly do in this case?
Madam, in case of a voluntary liquidation, the Act and rule
Hmm.
says for
Hmm.
if you are not able to meet this 90 days to 70 days timeline, you have to go
Right,
to
sir.
stakeholder for a extension of time.
Right. Calling
There
of
is
the contributories meeting.
yes, stakeholder contributory meeting, basically
Hmm.
shareholder meeting.
Right, sir.
So you need to keep extending those timeline. So that's the only option available, madam.
Sir,
In
Okay.
in
case it
addition to
happens
this,
to court and all.
Okay.
hello. Sir, in addition to this, I have a voluntary liquidation case in which ESI department submitted claims in wrong form as well as for wrong. After commencement of, he also issued notice and order has not been passed yet. So, what is the circumstances in this case? Should I reject the claim of ESI department, or should I pay the tax amount for the month of December 21, which he is asking for?
Uh, Pankaj, yes, I'm also facing these kind of cases where ESIPF department comes, after many months. But of late, I'm seeing in Bangalore, they are sending the claim properly within, the moment we intimated. But to answer it, if in case money is available in the bank account, you have a sufficient solvency, please pay such liability so that any of you are closing the company and going for a dissolution, unnecessarily don't want to get into any litigation. That's a advice. If not, if there is no money, everything is done, claim has not received on time, you have that provision under IBC that claim has not received on time.
Sir, basically money is there, but for December 21, they have charged on ad hoc basis. The actual liability was 800 only, but they are asking for 50,000.
Sir, if you can provide books to them, meaning that register, labor,
Sir, I had
statutory.
provided them, but they have started detailed scrutiny for the financial year 21-22.
Okay, please go ahead, submit the whatever register they want, close that matter
Okay,
with them.
I'll submit. Okay.
Yeah.
And what if they issue a fresh notice for the other period also? Means in 21-22 only and before December also? Should I say no to them? Please keep your scrutiny for this December 21 only, as you have submitted the claim of December 21.
Sir, I not heard you well. Some
सर
December 21.
उन्होंने सिर्फ दिसंबर 21 का डेटा का वो डिमांड भेजा था, उसके अगेंस्ट मैंने 21-22 के सारे डॉक्यूमेंट्स उन्हें दे दिए जब उन्होंने फ्लैश नोटिस इशू किया था। अगर वो दिसंबर 21 से पहले की भी पेनल्टियां निकालते कि कंपनी ने ईएसआई नंबर दिसंबर 21 में लिया, अगर उससे पहले की वो अप्रैल से नवंबर तक की भी लाइबिलिटी निकालते हैं, तो शुड आई डिनाई कि ये पीरियड आपकी उसके स्कोप के बाहर है क्योंकि आपने क्लेम दिसंबर 21 का सबमिट किया था सिर्फ?
Sir, you can ask for them.
Okay. Thank you, sir.
Sir, if I may share, I have an experience on that. So till now around 11 to 12 assignments I have handled voluntary. So what typically happens, I know the scenario wherein PF officers have filed their claim within time. I also know the scenario where we have filed the returns. A typical practice being followed over here in Maharashtra, or rather especially in Pune or Mumbai, is whenever I publish the advertisement or send an intimation to them, they do a scrutiny of past 5 years. So they have a usual practice. They do a scrutiny of past 5 years. They
right. My case is also from Maharashtra only.
So they try to find out as to what were the defaults. Firstly, in respect of okay, fine. So okay, I'm okay with that. So I'll restrict my discussion. Speaker, my apologies. You may kindly continue. We can keep the discussion at the end. So that's fine. Okay.
Okay, thank you. Sir, maybe, I will, a lot of questions are coming. I will try to finish it off in next 1 hour. I thought I will go through the Bayer Act, read it and all. Maybe I feel it's, not sure, maybe we can read together because some amendments are there in voluntary liquidation also. We can get a lot of insights from each of you. I will try to cover all these basic steps quickly and maybe at 4:15 onwards, maybe we can keep discussion on all those things. Maybe a lot of points may be there. So next practical comparison on voluntary liquidation and strike off. So most of you will know very well. Strike off comes under purely under Companies Act and voluntary liquidation under IBC. So just I will move on to the next slide. So the key benefits of opting for a voluntary liquidation is largely to get certain the clean or a legal exit, then followed by taking back the money properly after went through all tax scrutinies and tax review, labor department review, everything, so that a owner can confidently think that I exited my business properly, so that nothing comes bite backs later on in my journey of the other businesses. So that's why voluntary liquidation gives a lot of benefits and a kind of a peacefulness to the business community. Then next, I think we all were discussing, department coming with a claim, this method, that possible method and all. So after my experiences, right, going through various cases, I found out that, certain practices we should follow. It may not be written in the book or it may not be our, obligation in some cases, but we have to be watchful, careful so that this journey of liquidation is smoother. At the end of the day, we all practice, work to lead a happy life or a simple life, rather than getting into any departmental issues going to the court and becoming a case law for somebody else tomorrow. So that should not be, that is not an intention of anyone. So I, follow certain steps. Maybe it may be worth useful for you to consider. First and foremost, see, for any assignment comes, right? We generally get into taking up to date balance sheet, which is required under the law, uh, to ascertain, what is a liability or what is asset. But I generally, what I do is I take up the book access from the company with all user ID password of all department. We generally do a sort of overview of the company compliances. Due respect to their auditor and the team, everything might have maintained very well, but still we just go and do some kind of a reconciliation and double check on the whatever done historically. uh, in As I said, in my couple of my experiences, what liability came later on, without our notice. uh, Actually, in those assignments we have not done this kind of homework. We went with whatever balance sheet provided by the company and the auditor, we believed it. But when we see some books are not maintained well, the liability also looks good, then going and fighting back becomes difficult. Especially, many of you might have experienced, once we file for a liquidation, usually the erstwhile director or a management will not be that kind of supportive or interested in the work, than what they may be before when the company is active. Especially when the money is repatriated to them or money is given back to the investor, I think we will be alone in this assignment. We only left in the company. Most of them may not support. So that's why it is better we go back historically at least 2 years before accepting the assignment to check, is there any notices. It might have came in the login but not delivered to the company because some change in address or a change in email ID, various reason, practically we see. Check all those things, make a little bit homework about the company, what business they have done historically, and also see that business is a risky business, where they are into some finance activity or the nature of business itself is little risky. All those homework what I do as a first step before even I accept the assignment, or initial discussion will go around checking those financial history or a record of the company to make sure that company is actually solvent or what they are making the statement to us is correct. Then, second, we need to ascertain from them, is there any litigation in the company? There may be litigation between the shareholders. There may be litigation by the company. There may be litigation on the company. Maybe litigation from some third parties we never knew. So we have seen a cases where employee had made historically fraud, and cases being filed and never reported to us. Only when we went to the final stage, we ascertained that there are some employee fraud in the company. Various such instances without our knowledge, there may be something existing. Now, I have a case where some arbitration award is made and that is being challenged. And client is hopeful that arbitration award was in their favor, and in appeal also that will be in their favor. But they want to disclose that this litigation is pending, and it is a litigation not by the company because appeal may be filed by the opponent party. So not sure. Only when I digged further, got into all those things, I am able to see that there were some invoices related to arbitration. Then we are able to realize that there is an arbitration case pending. Till then, they have not disclosed that there is going to be arbitration or there is a appeal chances are there. So now assignment is not accepted, on hold, waiting for that arbitration time limit to complete so that we can take up an assignment and move ahead. Had it, I have not observed it. Maybe it could have been another case study for me to fight, because once I accept the assignment, there is no way we can come back just like that. So we have to fight in the entire process. To avoid that any fight in the future, it is better we do our homework properly. And secondly, when uh, the foreign companies are involved as a shareholder or a foreign company as a major shareholder, it is good to check how they got a ownership in India entity. Is it by acquiring the shares by way of filing form FCTRS, or is it because by way of form FCGPR? If that is done, whether that is filed and approved on time. Nowadays, we are seeing late submission fee paying paid by the company if it is filed delayedly. But old cases, 2017 prior cases, if it is delayed, FCGPR or FCTRS might have approved, but RBI says that this is subject to compounding. Company may not have done that, but we need to make sure that that compounding is done and penalty is paid, because at the end we are going to say that all the laws are complied. So we have to be careful from that perspective, and good to get those things sorted. And some cases there may not be FCGPR acknowledgement or FCTRS acknowledgement, or there may be a downstream investment cases also. That kind of reporting is done or not, that to be checked properly, because this question will come during a repatriation time also. If we are not having this kind of acknowledgement, then repatriation may get delayed, and repatriation again, old KYC missing or some FIRC missing, any such issues comes, then the entire process may get affected for a simple reason that the FCGPR or FCTRS were not approved. And also, if there are a foreign company involved, we have to see from that import-export transaction point of view also. In the books, it may be treated as an advance or maybe receivable. Under FEMA, there is a 270 days timeline or a 360 days timeline to set off the advances. If that is not met, again we may have an issue from our banker or RBI tomorrow that import and export have not done properly. So this kind of a basic check about the company should be mandatorily carried out. And also, the director here might have been disqualified because some other entity not filed the return for 3 years, 4 years sort of things, any such issues or anything as such, to be checked even before we pass that board resolution for declaring the insolvency. Before that, whatever needs to be done, check thoroughly. At least for me, 2 years what I'm checking historical data to make sure that everything is clean, and we take the balance sheet for the board meeting approval purpose duly signed by an auditor only. Act does not say any auditor signature. It says only financial statement provided by the company. So to be on safer side, it is better we check from a CA, so that those numbers are verified by another third party also, so that we are very safe. And also, before the assignment, as I said, all board meeting minutes, up to date data of the company, because that is one of the point. They have to make sure that all historical books of account data being kept in a safe custody or in a proper manner. That's one of the requirement under the IBC. So collect all historical data, board meeting minutes, all these user ID passwords, any litigation notices, communication, anything related to past life of the company should be clearly ascertained, and then only we should accept an assignment, and start working and moving ahead with the liquidation process. So then when we check this, then we move ahead with the liquidation process. So as I said, in theory, when we see the balance sheet, everything looks good. But when practically reality, when we get into the assignment and its execution, in my experiences, at least in Bangalore, what I've seen is the moment we intimate to the labor department, they are coming back with the claim. STPI, if the company is related to software, non-STPI or STPI department coming back with certain claims or whatever due, they will 100% do as per the law. I've seen professional tax department coming with some historical delays, PF, ESI, income tax, GST, anyhow, they may come for all this claim or liabilities. But generally, what I suggest the company is, in case of a voluntary liquidation, you surrender all those licenses and then only come for a voluntary liquidation. Surrender in the sense, if there is no further GST refund or anything is expected, then you please surrender the GST. Anyhow, you don't need a GST, or in the liquidation process, you are going to waive off any GST input. Please surrender the GST. That's the best way to do it. Usually, after the court order, we go for a GST surrender. But I'm insisting that upfront only you surrender the GST, so that if anything is there, we'll come to know. Once you file for a GST surrender, after that, we have to file one form. If my memory is correct, GST or 10 or so. We have to file GST 10 or so that GST office gives
Form 10,
the
Form 10. Yes, you're right.
Yeah,
Form 10.
yeah, thank you. GST department clearly gives me an order that GST is closed. So that means I'm at least 60-70% confident that GST is surrendered, nothing is left. I can breathe properly. Then same wise, ESIP, if you surrender, the interesting point is, if you can surrender it before liquidation, that time itself there may be possibility as that department can call you for books of account. Before surrendering approval itself, they may scrutinize you and ask you to pay penalty or something, if anything is there. They generally come for, in my experiences, some delay in remittances some 4 years back, 6 years back, 2 years back, we absolutely will not have any control because auditor or a management may not report it in their books. I think they levy some 75 rupees, something like that, and some interest on the delay in remittances, all those things. So if you can take a step to surrender it while or before the liquidation in process, it will be very clean. If any liability is there before liquidation itself, it will be paid. And if that registrations are surrendered, I can breathe well that, licenses are cancelled. That means at least more or less many compliances are taken care. So same with professional tax department, if that state has PT or if they have multiple branches in India, in each state, please close all those licenses. So other than this bank account and income tax PAN, rest all can be surrendered even before we start the liquidation, because any company is not going to do business. There is no need to keep those licenses and pass it on to the liquidator to surrender all those things. So we can smartly do like this so that our safety or the work or the entire process will be much smoother.
Sir, one question, sir.
Uh,
What if there are unpaid expenses, and to that extent, some GST may arise, some liability may arise? Is that a risk in terms of closing the GST in advance?
Correct. Sir, my point was, as on the date of liquidation, I assume most of the assets liabilities are settled. Most of the liabilities bills are also settled. That means I pay a GST to them, meaning I directly pay to the client.
Right.
And I may have an input setting in my book. Suppose I'm expecting some refund from the department and I want to offset this input. Maybe then I can hold on to that. I know I can close the GST later on once my refund such process are over. If the amount is small, maybe I can waive off and go ahead for the closure. Let the input be with the department.
Okay. And if there's some ITC credit which is there to our account, I mean, then let us say you file for GST closure. At the end of the process, department will refund the ITC credit amount, is it? Or it will remain in the account, ledger?
Sir, it is remain in ledger. I know very well, taking money back from government is not easy. They will not give you, sir. That's gone. That's why you have to ascertain if amount is small, it is better to forego and move ahead with the work.
Sir, do you also issue notices to PF, PT, and other authorities?
Yeah, we have to intimate all statutory authorities, sir.
Okay. And number two, if we read section 88 of GST Act, be it CGST or SGST, which casts a duty on liquidator to issue notice. So it states that the liquidator is supposed to issue notice to the commissioner. So for example, in income tax, we issue the notice to the AO, the ground level officer. But in GST, the wording used in the section is commissioner. So practically, do we actually give the notice to the state commissioner and the central commissioner both? Because typically, every GST number has two authorities, state and the central, and to the respective commissioners. And suppose a company is having 20 GST numbers or 15 GST numbers. So does that mean the liquidator is supposed to give 30 notices to each of the central commissioners and the state commissioner?
But sir, ideally, I give notice to both the GST officers, both central and state. And before this session, while preparing, I was looking for one note. Somewhere I read. You can also search in GST when any liquidation start. I think they have some mechanism where IBBI automatically sends that our public announcement to the GST department, say some top level commissioner assume, and automatically they have a system where the liquidation also get intimated to those department at the government level. I read somewhere, I seen that chart also. I have not saved it, I was searching for it. That's what somewhere I read. Whether that mechanism exists till today, I don't know, but irrespective of that, wherever I have a GST, I should intimate to those officers.
And to commissioner level only, commissioner of state tax and commissioner only, not to the ground level officer.
Yes. And if you open that GST certificate, right, down, there will be some, assessing officer or some superintendent with a GST ward number, something like that. So address to that and refer to that commissioner and send a letter.
Okay.
And a couple of my cases, what I do is, as a practice, I visit the GST officers. Historically, if the company is doing a good turnover, some lot of GST, historical, some assessment were done or a refund is done, as a good gesture, I go to them, tell them that this company is under liquidation. Boss, if you have anything, please let me know.
Thank you.
Yeah. Yeah, so theory, as I think we discussed in length, maybe we will discuss afterwards also that how practically all these claims can be handled. Then I go to the pre-planning. Okay, so then once we ascertain all these things, all of you know the process that company or LLP need to pass a board approval. In case of LLP, majority of the partners consent or a resolution, whatever process is given, board approval. Then I have a 4 weeks time to do a EGM. And also if there is a creditor, I have to do a creditors meeting or a creditor consent to start a voluntary liquidation. Here I split this into two way. One is assume the board consists of only Indian directors. It's very straightforward because as on the date you draw a balance sheet and in the solvency declaration, right? We have to mention any litigations are pending, what is assets and liabilities of the company, which we take from the financial statement given by the company, all those things. And it says it is duly affidavit, right? It is like declaration in the affidavit form. That's what my section 59 and the regulation says. So that means affidavit means it has to be stamped. So that means my declaration of solvency should be notarized, stamped and notarized. So that means I have to time for the stamp paper. As on the date of board meeting, technically I should have a stamp paper and affidavit given by the directors, and notarized maybe subsequently or maybe on the date of the board meeting where I given a solvency declaration or commencing the voluntary liquidation. On the other side, assume when there is a foreign directors are involved. Again, for the foreign directors, they are obviously they will be outside India, right? So again, we need to plan here. What I insist is, as on the date of board meeting, at least the declaration what they do notarized over there in their country and send a copy to us. Apostolization generally takes time, and that notarized and apostolized document at least comes before the EGM date. That's what I insist. Some people I saw they follow only notary for the directors, but I follow the mechanism that as on the board meeting, foreigners affidavit and declarations given are duly notarized, and the before the EGM they provide me the apostolized and original set of all those documents so that the liquidation can be commenced. And second one is, once the board meeting is done, I generally request for the management to not to do any transaction in the existing bank account till the liquidation bank account is opened, all the money is transferred. But I have seen some cases in my assignment also, after the board meeting, before the EGM, there are instances where management have done some transaction. They paid some amount, some vendor payment, something like that. I have accepted or ratified it after the liquidation start, but it is good to make sure that, up to the date of AGM, nothing is done unless it is super urgent, because no prohibition on that. But it should not happen that, somebody withdraws the money illegally or something, I don't have any money after liquidation start, or any such, nuances should not happen in the company. That's why we always insist that, nothing takes place. So from the board meeting, we get into the EGM, and also based on the creditors availability or not, we get into the creditors meeting. If not, with the EGM meeting, as everyone knows, my liquidation starts. That means clock starts ticking. I have get on to this collection of historical records. I wanted to tell what all are the documents basically we have to collect. I have explained it. So all this from our secretarial perspective, we have to have it on the record. Statement. Okay. Okay. So after this, board meeting is done, what all are the board meeting and EGM done, what all are the next steps to move ahead with? So since in my cases I do all the check prior to the accepting the assignment, but under the law, once our appointment is done in the EGM, we get into filing the consent form, paper advertisement both in regional and the English language newspapers, and also if they had businesses across India or multiple branches, maybe we have to advertise in those branch or such states also. That needs to be ascertained. We carry out a public announcement, then followed by intimating to the all statutory authorities, whoever there, whether they have surrendered or not surrendered licenses. I generally intimate to all the authorities. If FEMA is involved, we write to RBI also that this is being under liquidation. I write to bank. When we send out a bank, the challenge what we face is many banks, they block the account or they will freeze the bank account. They won't allow debit, only credit is allowed. So money can come to the account. Debit, they will freeze it. Generally, I write that, if there are a lot of money, I write that, you make me as a signatory to the existing bank account also, so that I can transfer it to the liquidation account my own, rather than depending upon the previous management where directors are staying abroad or, banking control with the foreign parties. So I become a signatory. Otherwise, the existing signatories will continue to operate the bank account, but without our instruction or approval, no transaction to be done in that account. And statutory authorities to be intimated, followed by ROC filing, the MGT 14 and the GNL related form, and getting registered and approved at ROC level, intimating to IBBI. All that assignment intimation takes place. Then under ROLA, we have to check that in last 2 years, historically, there were no issues, be it fraud or any preferential transaction or anything as such. Next, in parallel, we have to open a bank account with any of the bank. I generally go with the bank which is preferred by the client. If there is a repatriation involved, I work with a bank which is going to give a good rate while repatriation time to protect the interest of the client. And also, those are like little hassle free, right? They should not do lot of problems while repatriation or handling the operation, and which delays the process. So I work with a bank which knows this kind of process. And also one more suggestion is, suppose in case in a voluntary liquidation you have a good amount of money to be payable to the shareholder, and this process say takes time, assume some income tax notice comes or some reason you foresee that within 270 days or 90 days you are not able to complete the assignment, maybe it is good practice to park that money in a fixed deposit, so that some interest comes to the client, maybe some cost is recovered to the client. I have tried with one client, and actually they have appreciated it very much, and their liquidation cost was also recovered in that. So maybe that may be the another option to keep open in case if it is possible. If not, should not touch that also. Let the money in the bank account and try to repatriate or repay to the shareholder quickly, and also take a approval and then only keep such money in any way. So then within a 45 days, uh, uh, within a quickly open a bank account, get all money to the liquidation account. Once that money is in the liquidation account, uh, within a 45 days, whatever, within 30 days, whatever claim being received, or maybe when the management has given me the financial statement, there may be certain liabilities recorded, and those guys might have given a claim. uh, Accept all those things, start making a payment to all those uh, parties who are genuinely eligible to get paid. Of course, first payment come to the insolvency professional, and you will have a paper advertisement related cost, then followed by whatever money being came that has to be paid to the respective parties after deducting a TDS if applicable. If TDS is not applicable, you can go ahead and make the full payment to the respective parties. Public harassment, tax authorities, labor. So as I said, now the main discussion, I think earlier also we discussed the challenges. What we foresee is, once we intimate to all these department, the claim may come from various authorities or a various department. So the step is to see whether the uh, claim is genuine, or historically whether that is missed out to pay something. All those things, based on best judgment basis, based on merit of the case to case basis. As a liquidator, we will have that authority to take a call whether this claim to be accepted or to be rejected or to be paid or not. And all this assessment or anything notice comes, what I do is, as I said, I accept it generally. If there is a money, if I not yet repatriated the amount, I uh, visit to the department and check with them. If not, if I receive any claim, I accept it, even if it is time barred or something, because it's a voluntary liquidation. I have accepted, management has told that they are making the liability good. I generally go back to the stakeholder and check, is this liability acceptable to you? If they are fine, I will pay it out, because end of the day, it's their money. If they are willing to pay it out, I'm more than happy to pay. Unnecessarily, I don't want to get into any litigation sort of practice. Only when my stakeholder has an issue, I will, um, see what best can be done, or else making the payment in a good way seems to be very good. So ascertain all those things. Make sure that every liability, single paise is paid to the core, so that we don't have any issues in the, liquidation journey. As I said, intimating to the department, very, very important, especially Income Tax Act. If you see the section, it says I have to intimate to the assessing officer. That means we should make sure that our letter goes to the respective concerned officers only. It should not happen that I have just written as Commissioner of Income Tax or some assessing officer of income tax, and it not went to the concerned or a related officer. Please check on that. For that, maybe historically you can refer to the company whom they are communicating. What is the assessing ward number or a jurisdiction, officer name or something like that. Give it to them. So in income tax, always give it to the TDS department. Give it to the regular assessing department. If the transfer pricing is applicable, give it to them also. So there is, no issue, right? As long as you comply well, give it to them, so that I am safe that I have intimated to them, because the section is very clear. If the intimation is incorrect or fail to intimate, there is a consequence on the insolvency professional if anything goes wrong in the future. So for our safety, it is always best practice to intimate to, especially to income tax department very clearly, and to the GST also. Make sure that we intimate well, and if you have a sufficient time, please meet them. If not, at least 1 or 2 times, I generally send out a letter to them, stating that, this is not being replied, or, not being communicated, so that from my end, communications are very clear, so that nobody can dispute that action at all. Banking issues, I've seen in couple of cases where there is something called EPDMS, or some import-export related reportings were not historically done properly. And, one of my repatriation was held back by the banker, that, that import-export bills were, somewhat not reported very well. For me, that kind of things were very new in my assignment. I was also not sure how to, do those things, because there are so many laws, so many provisions to comply. Uh, if you look into the law, it looks like insolvency professional should be like a master of all laws. That's what the expectation. But practically, many things we won't know only. In that case, I was not aware that some EPGMS or some compliances were pending. Bank had told me at the last moment of my repatriation, where my 270 days were also getting expired. So it became a little bit nightmare, where some STPI filing was also pending, some historical soft X was also pending. All that were brought to my notice by the banker. So again, it's a problem, right? Whether I have to comply or not to comply. Whether I should say to them that, you're telling me after my, claim period or a public announcement period is over. But again, this all are a roadblock for the repatriation for me. So I end up in going and regularizing the soft X, and then import export, some issues, bill settling. Again, that entire month process took me 3 to 6 months of time to resolve it. Here I have two challenges. One, I fix a fee based on the work, but when this kind of additional work comes, we won't get paid for that, because it's a job we do generally. It's a part of our work in a way. So for us, it's a in a way additional effort without being compensated. And also, the process never gets old. You cannot get into another assignment, unless you complete these. So it's a kind of, unnecessary creating a trouble for us. It's like a, uh, so problems, looking for a solution. To avoid that, I think all those checkups should be done earlier itself. Otherwise, in the journey, we may face the issues. So this all are the recommended, be in touch with banker, visit them, or, have a, before opening the account itself, tell them the path that these all are the things I'm going to do. Please help me in the journey, because the person who opens the account, the team which helps us in the repatriation process are different. So if the repatriation team has certain different steps to follow, please check that upfront. In my cases, I worked with HDFC many times. As per me, they took a time, but they have done a lot of check, which helped me also in a way to comply with the law. Then opening a separate bank account, I have touched about it. Okay, then on the last chapter of the part. So when we distribute all the proceeds, right? So the next step is to go for distributing the money. Then I have to close the bank account, close all the existing bank account as well as the liquidation bank account. Before closing the bank account, make sure that all the bank statement of last 2 years are kept in place, including the liquidation account. When we file a petition, providing a bank statement is also a mandatory attachment. As I said, the Income Tax Act compliance, please make sure that that is taken care. Then once we have all the bank account and everything is done, we are good to file a petition. Now, before that, I want to explain how this tax distribution works in case of a liquidation. So I will take first example of a foreign subsidiary company where the single foreign company is the owner, and I have say 10 crore to be repaid to the foreign shareholder. Assume their paid up capital is say 10 lakh rupees, including the security premium. 1 lakh paid up, say 9 lakh as the security premium, 10 lakh is the paid up, and I have a 10 crore to repatriate. That means 9 crore 90 lakh is the balance goes from my profit balance. That means historically, whatever profit is being made, that I am repatriating. So here the tax treatment is, we have to take it first on a proportionate basis. Entire amount what I am repatriating it, 10 crore. And 10 lakh is related to the share capital. That means, say 1% is related to capital transaction. So out of, I apply that on a proportionate basis. Say for a 10 crore, I have to take say 1% as a capital repatriation, balance 99% as a dividend declaration. So under the Income Tax Act, the 1% what I repatriate, like capital plus premium, apportionate, in proportionate to the total distribution when I compute, that will be taxed at 12.5% as a long-term capital gain or a short-term, as the case may be. Remaining will be treated as a dividend tax, which will come under 20%. Plus on that, surcharge, cess, all those things. Together, it will come around 21.26 roughly. In that percentage, I have to deduct a tax. Balance amount, I have to plan and repatriate. So when we plan, here you need to plan because money will go in a foreign currency. That means you need to do a working in INR and a foreign currency for approximate working. And because you need a 15 CSCB, which you compute on INR basis, that's what you fill in the A2 form and in the repatriation form. And you give in INR that this is what it will go. And there may be a foreign exchange loss. The reason is in INR, it may be X today, what I repatriate basis on the exchange rate. So that kind of things you need to be, keep in mind. And also you should speak to the banker upfront that what rate they may apply and how the working makes. Correct. Send those number to the management before you repatriate so that they are also in line with whatever working we made, and then repatriate and pay the TDS within 7th of the following month and file the TDS return. And for me in NCLT level, this point will be very much scrutinized. So we should be, I think, double careful. Even if required, maybe deduct little bit extra also, but don't uh, take any interpretation issues and, because of currency exchange or anything, TDS should not be a hit here. And also, if the client or a foreign shareholder has a tax residency certificate, TRC, then the TDS rate will be less. So maybe you can let them know upfront, subject to DTA, double tax avoidance agreement with that country. Maybe during the assignment itself, we can let them know that, you please get a TRC. Maybe you can get a lower tax deduction in India. If not, we'll end up in deducting 21.2 sort of a TDS over here. And also, before the assignment, tell them don't to close any foreign account. I have seen one case where everything is ready. Foreigner had closed their bank account and we were stuck with repatriation because that account was not there. Again, we told him to open a bank account, and also such a kind of a communication gap should not be there in the journey. So this is a important factor in our process, and this happens in our period, right? So that we should not miss out on this subject at any cost. Maybe if you are not doing for a first time or not experienced or well versed it, any of you have to appoint an auditor to do the books of account. Take their help, and any of they have to give a 15 CSCB. Take their help and do it for a paisa to paisa and repatriate the process. And 15 CSCB is the mandatory document what we need to do, what we need to give during the repatriation, along with form A2 and all the enclosure, historical FCGPR, all the IBC document we need to provide to them. Someone has raised the hand.
Yeah, I have just one question. Like here, in case you are paying less than the paid up share capital, then this is not applicable.
Yeah, I'm coming to that example.
Yeah.
So this is a scenario where I have sufficient money, and next scenario is where I may not need to repatriate even money also. That's also possible. It should not be a case that you have to repatriate mandatorily. Even if you not paid any money to the equity shareholder, meaning if you don't have that kind of money, it is also allowed. It is not mandatory that you have to pay to the shareholder. The loss is it only paid debt to be paid to the creditor. So if the shareholder are not getting paid, still it is allowed in liquidation. And in some cases, I've seen where only preference shareholders are got paid, meaning in startup segment, right? They have invested 10 crore, but money left is only 2 crore. So we pay only 2 crore in proportion to their investment to the respective shareholder. And equity shareholder may not get any money also. That's also fine. And that is, anyway, it's a loss investment to them. They can claim a capital loss and no TDS, nothing. It's just a giving back the capital to them. So the TDS angle comes only when I'm repatriating the money more than my capital, whatever I had invested. So that's where TDS will come. Otherwise, no TDS or a dividend related concept will not come to picture.
Yes.
Sir, this is Purnima Shetty here. Am I audible?
Yes.
So in one of my case, it's a startup company. If there is a preference shareholders who have invested their money and the foreign preference shareholders, and they have bought in the securities premium also. So while repatriating, will it be considered over and above the share capital? I mean, if I'm repatriating also the securities premium, will there be a tax liability on the security premium because they have a shareholders agreement and everything, which has a liquidation preference?
Madam, that's what I was saying. Suppose if you are repatriating the exact investment amount, that in your case, paid up capital plus security premium, because that means you are only returning their investment, then there is no tax angle to it, madam. If you are repatriating you more than that amount, including that security premium, then there is a tax angle.
And there is one more thing I wanted to understand. If there is, if there's all startups which have investments from foreign countries or internal, they are backed by a shareholder agreement, share purchase agreement. Will that agreement will be considered as a contract because it's a declaration of solvency? You have to basically honor all agreements. So if I'm not able to repatriate their entire amount, can I be still considered as solvent?
Okay, madam, if you look into other way around, I'm going for a liquidation after taking 75% shareholder approval. And also, I assume when you have a shareholder agreement, this will be a resort matter in the agreement.
Yes.
That means shareholder himself giving you authorization to liquidate the company.
So, what I am doing is, in case there is one shareholder or two shareholders.
Madam, sorry, 1 second. Let me finish. If you see the voluntary liquidation section 59, the word starts with default. If you go to the default definition, it only speaks about the debt. Debt does not include your preference share and equity shareholder.
Yeah, true, but still it is supported by some agreement. That's why I was asking.
No, agreement is all right. Agreement is all right. Agreement also returning the capital only. It may not be an obligation, right, on that. If there is no money, that's it. Whatever available, I will distribute to them.
So I am taking a letter from them if there is only one shareholder saying whatever is whatever amount is balance after paying off the debt will be payable to them.
Okay. Yeah, that's what, madam. Before starting the assignment, right? Whatever homework to be done, around all those things. I think ideally we should do it by then only, rather than, doing all this action at a later point of time, getting into any kind of issues later on. Maybe while
So
liquidation
one
time,
more
it's.
thing. Sorry. So one more thing, I would also like you to throw some light when we are distributing in species rather than in
Distributing?
in species. I mean distributing in kind. If you're giving away the property itself and all, I want to know the taxation aspects.
Okay, madam, sorry, I didn't get you. Distribution in kind meaning?
In the species, if I am having some property, I value the property and give the property itself to the promoter instead of this thing.
Realizing it.
Yeah, liquidating it and realizing and then paying the cash. Or suppose there is a mutual fund investment and I'm giving away that mutual fund investment directly to the promoter.
Okay, madam, I honestly not seen these kind of cases so far. My thought process is because this may require a valuation under 59.
Yeah,
after the
there would be a
liquidation.
valuation, but I want to know the taxation aspect in such cases.
Madam, if my memory is correct, the income tax 72 old section, right? All those things speaks about liquidation is also a transfer. If my understanding is correct, I have not seen these cases. Maybe I can check and let you know. So it will be a transfer, madam. And so whatever valuation comes, I think to that extent, there will be a tax implication. Same like investment value, what is the market value, difference will be taxable, ideally.
This would be a distribution of assets, right? Where
Yeah,
you are
it's a
giving the
distribution of assets.
Yeah,
Like
distribution
a
of
transfer,
dividend then. It's a dividend
like a
then.
transfer for the income tax purpose.
Yes,
Sir,
yes.
can I add here, sir?
Yeah.
Sir, this would get. I have done this in liquidations, wherein the property has been transferred to the promoter, like Madam has told, in specie, without having the funds transferred, because there were no other creditors, no liabilities. So the only promoters were the sole owners or the sole beneficiaries of the liquidation. So it has been done. So, madam, you want to know the taxation aspect? Is it? It will get covered under section 46 itself, because 46 covers distribution of any asset. So, to the extent of accumulated profit, there will be a dividend, and TDS has to be made on the dividend part. The remaining part will be treated as a capital gains in the hands of the shareholders.
Someone actually, I coordinated with some people. They said that there would be no capital gain aspect unless and until, I mean, during this transfer. But when actually this promoter he sells off the asset, the capital gain aspect would come in during that time when he's selling the asset, and not
No,
during this transfer.
it will come during this itself, because under section 46, as you see in income tax, though it is not a transfer, it is that there is a specific clause that assets distributed in liquidation to the extent of accumulated profit under 222C, that it's a dividend. Over and above the accumulated profit, it is a capital gain, and you have to work it out. Like sir said, first of all, a valuation is required beforehand itself if it is a property.
Valuation is required, yeah.
Required. So, and usually in such cases, if it's a property, it will be on the higher side, because see, the companies which are getting liquidated with property are the old companies, which have been in business for.
So over and above the capital and deducting the whatever is the accumulated profit will be the capital gain, right?
Yes, over and above the accumulated profit will be the capital gains. Yes.
Sir, why not it will taken as an inheritance transfer and the taxation will applicable when the promoter will transfer to the third party again?
No, at that point of time, he will get a higher cost break. Subsequent transfers you're talking about, right?
Right.
See, the first transaction wherein the liquidator himself is distributing, there is a tax implication. That's what I'm saying. It cannot go tax free, because the land is getting transferred from the company to the promoter. It's changing hands.
So don't you think it is not a transfer? This is a transition in the case of liquidation from the company to the promoter?
Technically, as per that section 46, it's not a transfer, but there is a taxation. That is what I'm trying to say. If you read section 46, it says anything over and above the accumulated profits will be a capital gains.
Okay,
sir. Over and above the accumulated profits, how does it happen, sir? Once the asset is transferred to the shareholders, because the whatever accumulated fund, the whatever share capital value and the accumulated funds, to that extent only we have to transfer. No?
No.
Because
See,
this is not the actual sale to the others. No? That is the reason. No? To the extent
The
of
dividend, no, sir.
sir, you please see section 46. Section 46 clearly says when in the situation of a liquidation, if there is a distribution of any assets to the extent of accumulated, it's only a characterization issue. To the extent of the accumulated profits, there is a dividend in the hands of the shareholder. So it is a dividend income. Over and above the accumulated profits, it becomes a capital receipt. Then there is a capital gains implication which arises. This is as per section 46 what we are doing.
Gain in the hands of the company or in the hands of the
shareholder, sir? Shareholder.
Hands of the shareholder. If it is an LLP,
Yes.
what is the treatment, sir?
LLP also would be the same because it is a partners, right? But I have not dealt with it.
Ideally, it will be shareholders, no, sir, in a way. LLP also.
They are also
my
the
question is, sir, to that extent of whatever share capital value and the accumulated profits only, the each shareholder will receive. Here is the question of over and above the accumulated profits, sir.
Of course, more than that, if there is a company, okay, to the extent of accumulated profit is what is there in the books. If there is a market value which is higher, which is not captured in the accumulated profit, market value, we are not capturing it in the balance sheet. So the market value is what we are, at that value, we are transferring it to the promoters.
You are saying that the SRO value.
Mr.
Sorry?
Ganesh, Mr.
Correct.
Ganesh,
Sir,
Suppose
book value
it is
and
in the case of
Reserve
immovable
value,
property.
correct.
yeah.
Correct. Market value of the property, at that value, he is getting the property, no? When the liquidation is happening.
Okay.
Sir, maybe simple example, sir. Say land market value, say 1 crore. Accumulated profit in the books may be 50 lakh. So that's where the difference, right? So promoter
Correct.
get a 1 crore asset from the company as a liquidation distribution.
But Mr. Ganesh had a point here. See, in case of immovable property, you have to kind of transfer this property at
Sir,
the
I cannot hear you
reset
very
value.
clearly. Your voice, can you please increase the volume of your...
Yeah. Now am I audible, Mr. Ganesh?
Yes.
In case of if the CDA has a immovable property, you need to do the valuation by reset value, and if the valuation is much higher than the let us say sub-register value, so you will be transferring at the value which is arrived by the reset valuer, right? So you have to transfer at that price only, right? Otherwise,
Whatever is the
whatever
valuation
is
report.
the reset value price.
Yes, registered value or whatever he has arrived at that rate only.
At
Yes.
that rate only you have to do it.
Yes.
Not the government rate.
Yeah, in that case, the capital gain will arise, sir.
Obviously, sir, you have to do in the market that registered value rate only.
Market rate itself. Market rate. Whatever the registered value is pegged as a value, sir, and usually in such cases, there won't be huge variation, right? We will be discussing with the valuer also,
Obviously,
right? So it will be the market value only which will be considered, and even sub-registrar also the same value only will be considered for stamp duty and all that.
You're saying registered value end up giving market value, like registered value. And what would be the consideration? See, do you need to execute a share transfer like the sale deed or conveyance deed?
Yeah, I'll come to that. What I have done is there is a document called a deed of liquidation. So everything is to be done as per the property laws itself.
Okay.
In the deed of liquidation, we provide the details of all the shareholders, and we say that in lieu of them contributing the capital and as on date there being no liabilities, me as the liquidator, I am conveying this right on the property to the promoters by this liquidation deed, and there are a lot of particulars which will come in that liquidation deed, and that has to be registered with the sub-registrar. We have to go to the sub-registrar, and the liquidator is one of the parties because he's the person who's going to transfer or sell it.
You have to register so many liquidation deeds with the number of shareholders, or one liquidation deed?
One I think what we have to do is in one liquidation deed itself we can do it.
But in case book value and the whatever the SRO, the book value and the SRO value is the same, there is no question of capital gain, no?
Obviously, book value SRO, no capital gain, sir. No capital gain. So the shareholders will have only single document, all the shareholders to claim their property.
Correct.
Okay. So this is in which state you did this?
Sir, I have done it in Karnataka.
Karnataka. Okay.
Yeah.
Thank you, Ganesh. Thank you so
And there
much.
is a legal precedence also for this. NCLT has not only in Karnataka, they've blessed it, couple of other, because we have to produce this liquidation deed to the honorable tribunal also, and we have to pay the stamp duty, we have to deduct the applicable
Stamp
TDS.
duty, we have to, the shareholders will be paying, right?
Yeah, stamp duty shareholders will be paying. Absolutely right.
Yeah,
Correct.
because we don't need to get into stamp duty and registration charges and all.
Yeah.
Thank you. Thank you, Mr. Ganesh. Well, I think.
Thank you.
Thank you. So, yeah, next. Next, I think we have spoken about GST part. I will get into the final reports. So once all the assets and liabilities are settled as per our best of knowledge, get into final report preparation and get the audited statement done till the get the audited statement done for the liquidation period. It's a statement of accounts basically from a auditor. Get that and submit a final report to the ROC as well as IBBI, and followed by issuing a Form H and working on a dissolution petition part. So everybody knows, it's a NCLT formats or a petition what we have to prepare along with the all the facts of the case, whatever we have went in the liquidation process, with all the intimation made to the department, bank account, bank statement, audited balance sheet of the last 2 years, everything we have to consolidate, make a petition, submit that now in online and the offline method, and serve to the register of companies and the register of companies in ROC. Bangalore, they are asking for that to be given in a sort of a pen drive or a electronic form or attached to the form, GNL what we file. Sometime, there is a size issues that to be addressed, file and serve a petition and file with the honorable tribunal. Then after that, as you know, as a process, bench will serve a notice to the ROC. We have to, as a practice, they will call for a ROC report. If there is any objection in the ROC report, we need to address all those things. If not, generally dissolution order will be passed. And in ROC report in Bangalore, generally they write that the liquidator has to give an affidavit that all the compliances under the Companies Act is taken care as per his best of knowledge. And that affidavit we have to submit with the bench as well as the registrar. And once the dissolution order is passed, we have to submit to the ROC and make sure it is registered and filed with IBBA and IPA also, so that the entire dissolution process gets completed with that process. Each bench may have a different process in filing the petition or the document enclosure or a stitching method. I think that we need to be looked into, and accordingly we can close the dissolution process. Now I wanted to actually go through the Bayer Act as well as each of the rules, but I want to just run through with section 59 once, because of this amendment act just quickly, and maybe after that we can get into Q&A session. If not, maybe we can go to section 35 with some recent amendment, all those things we can discuss. I will just quickly open section 59 once. Everyone able to see the screen, right, with that section 59?
Sir, it's clear.
Yeah. So I think there is an amendment. If you see section 59.1 is okay. 59.2, the voluntary liquidation of a corporate person shall meet such condition and procedural requirements and be completed within such period, which shall not be more than 1 year, as may be specified. I think this is a new addition which was not there. Earlier we had only 90 days or a 270 days sort of a timeline. Now I think we have a very clear mandate that within a 1 year the procedural aspect should be completed. Any view or a thought process on this particular amendment? So it is 270 days. Afterwards, you can seek extension, but I think process has to be completed within 1 year. And
Does
interest
it
like
apply to
we-
old cases or only the new ones?
ideally, this is
Does
for
it apply to the existing cases?
it should be for a subsequent cases only, madam, because it can't be retrospective.
That means
Need to
we can't
hold the
take extension beyond 270 days. I mean, beyond 270 days, the earlier extension is not allowed now.
No, I think 270 to 365 is fine. After 365 days, I think you can't do anything. 1 year, that's what they say, means it may not be 365 days.
Like even after holding contributory meeting, we can't extend it after 1 year.
Correct. That's what I meant. I assume because it says as may be specified. So there may be something may come in the rules.
Okay.
Then I have.
But this current voluntary regulations, it keeps saying that, if you don't have any share creditors, then 90 days you have to hold. And if you have creditors, then every 270 days. And there is no limit on number of meetings which you can have. You can keep on extending for an indefinite period of time till
Correct.
such matter your voluntary liquidation is over.
Correct, you're right, sir.
So that 37 regulation 37 is there in the current one. So it is already specified in that regulation 37. Regulation 37, if you see.
No, correct. Now they bought some 1 year cap in the section, sir.
They have put this in the code. They have put this in code, but then again it also says as it may be specified or as specified by board. Regulations is prescribed by board only.
Correct. Here it says as may be specified. That means there will be some explanation around it.
So, but even as on current date, the voluntary regulations which are there, which is specified by IBBI, so the IBBI has already specified that every 90 days and 270 days you can keep extending it.
No, sir. But now they are saying within 1 year, this process should be done. If you see this, procedure requirement can be completed within such period, which shall not be more than 1 year.
Or as may be specified. That's what as may be specified. Anyway, let's see. Let's see what IBBI comes out with it.
Yes. Then we have section 5A. It says anytime after the commencement of a voluntary liquidation proceeding, application under 7 be filed, and voluntary liquidation proceeding shall be terminated if the following conditions are satisfied. So now we have an option where the members of the company have passed a special resolution for terminating the voluntary liquidation processing, or where the company owes debt to any person on the date of the resolution under clause A, creditor representing 2/3 value of such debt have approved the resolution within a period of, and such other condition as may be prescribed. So that means now with the shareholder approval or maybe with the creditor approval, I will have an option to terminate the liquidation proceedings, terminate the voluntary liquidation proceeding, and this should be intimated to ROC. We have all that MGT 14, all those process will fall in for us. So any comment on this amendment? Any doubts?
Sir, can you open the regulations once?
This one you are saying, section 15.
Yeah, the voluntary liquidation regulations.
Rules.
Yeah, rules.
Any specific number I have to go or everything?
So I think in rule number 3, the last part it says somewhere that for the purpose of this rule, 1, 2, 3, the corporate person means a person other than a company, is what I recollect. So I just wanted a clarification on. I had some doubt on that. So why does it expressly state it does not apply to a company?
1 second, sir. Rule 3 is what you are saying, right?
Yeah, rule 3. So if you go to rule number 3,
this is the one, right?
Just a second. Yeah.
Okay, in this?
I'm just opening, just a second, sir. Yeah, so the explanation. The rule 3 sub-regulation 3 explanation to that. Below 3, yeah, explanation, this explanation. Below the sub-rule 3. Yeah, here only, explanation.
The purpose of sub-regulation on a corporate person means corporate person other than a company. 1, 2, 3.
So because technically even in my assignments, we have been following this and the section 59, but I could not understand the logic of mentioning excluding a company as in this.
Sub-regulation 1, 2, 3. Corporate person means corporate person other than a company.
Because I genuinely find it very funny,
What is corporate person? Any definition?
So corporate person, I think, is defined in the IBC law, if I'm not mistaken. So it's not defined in the regulations. It's defined in the act.
Here it says company only.
Corporate person is defined in code, IBC code. If you see code, you will find corporate person.
Yes, so it includes company and the LLP.
Yes.
And yeah.
You see, there's a difference between corporate person and corporate debtor. Corporate debtor is the one who has taken debts. Corporate person is a person who has not taken any debt. There's no debtor per se. So that is the difference.
Yes.
So in case of voluntary liquidation, if you have only shareholders contributing, so then you have that, call it them as corporate person.
Parallel attack is going on.
And you may revert tomorrow.
Sir, what I feel is, see, already in the beginning, right, they have given a corporate person. So that means company and LLP together, the definition. So if you read without prejudice to whatever so and so section, liquidation proceeding of company and LLP shall meet the following conditions. So that means I have to comply all those things. For the purpose of sub-regulation 1, 2, 3, corporate person means a corporate person other than a company. Maybe.
Because I mean, does this mean when I'm doing a liquidation of a company, voluntary liquidation, I should not be referring to this 1, 2, 3. So I mean, that's even I spoke to many senior IPs. Even they were confused. Why does it say so?
Yeah, it is. Sub-regulation 1, 2, 3. Corporate person means corporate person other than a company. Yeah. Looks nice. I will read again, sir.
Yes.
So secondly, I wanted to discuss this section 35.
Could you please ask Mr. Anish to mute?
This is an interesting section 35, right? 35 to 54. Again, we need to comply. If you see this, explanation again, recently came, right? 20C. I am also reading again and again, see what they meant. For the purpose of this chapter, it is hereby declared that the provision of clause A and J of the subsection and section 30 to 42, 38 to 42 amended by IBC shall not apply to the liquidation process and a voluntary liquidation process initiated on and before the commencement of the code. So A and J speaks about making the list of claims, and the J speaks about settle the claims of creditor, all those things. So does it means I need not require to verify all those claim, or now on I have to start verifying the claim? What is that intent? I'm not able to understand in this particular case of section 35. Any experts' view, thoughts?
Right. And when you say administrative duty means what? Which is authorized signatory?
Mr. Anish, could you please mute?
Sorry, sir.
So,
Sir, only new amendments are not applicable.
no, correct. Amendment in the sense that amended law, whatever 32 to 42, not applicable. That means that claim verification related section. Second one is what is that A and J they are saying not applicable. What it means? Updated list of claims of creditor I need not require to maintain.
See, in an effect, what they are saying, the existing voluntary liquidation, these amended provisions does not apply. It's kind of a transition provision. That for the existing voluntary liquidation cases, these amendments do not apply. For only
And
limited purpose, no?
Subsequent cases, I have to start complying these two new amendments.
The first cases which are started post gazette notification, you have to comply this amendment provision.
So I have to start maintaining this list of claims of the creditor.
Yes.
Then followed by this settling all those things.
Yes. That's what I think this amendment regulation says in the Amendment Act.
And now I have a clear provision here that I can continue and institute a new
In class J, previously it was the invite. The invite word was omitted. To invite settled claims of creditors previously. Now the invite was omitted. It is only settled claims of creditors and claimants, and distribute the proceeds in accordance with the provisions of this code.
So now with this, now I have an additional.
Yeah, we need not invite any claims.
Can we get into question answer session if there are any doubts or all those things?
Sir, excuse me, sir. I'm Neha Keria here. Actually, what I think about that section 59 and regulation 3, that in section 59, subsection 3, it is mentioned if a corporate person registered as a company wants to liquidate, so their conditions are given for a company. So by regulations, they have clarified further that if a corporate person other than company wants to liquidate, these criteria will be followed. So they have mentioned in explanation that corporate person other than company.
Basically, it is for LLP.
Okay, madam. Sachin, you are saying raising hand.
So
Hello.
I have one question. So I just want to know that the company which is getting into a voluntary liquidation, my name is coming by the name of Mr. Sachin Sapra only. So the site Srishti. So my question is that once the company gets liquidated, so in that scenario, like of what all years a voluntary liquidator is supposed to maintain the records of that company that has been liquidated, and for how many years?
Madam, your question I missed out, meaning you are asking for how many years we have to keep maintaining that record, right?
Yeah, and for how many years? Like there can be a possibility that companies incorporated, like it's been a period of 25 years since the incorporation, or there might be companies which are just incorporated 5 years back only. So in that scenario, I just want to know that in number of years, like is it 8 year, 10 year? Like I'm not clear on it, so that's why I'm asking that of how many years the record a liquidator is supposed to maintain, and that is too after the company is liquidated, for how many years he's supposed to keep that record.
Okay. Madam, to answer, one is under a before the liquidation, right? Under a
Right.
Companies Act or the Income Tax Act, certain section says for how many years, those records to be maintained. For example, under income tax, you may have a 6 years of obligation. Under some other act, you may have a certain other, timeline. So
What
that
I
means
understand in the Companies Act, they all say it is of 8 years. Like, what understanding I have, I can be wrong. If you can
correct.
correct me.
8 years. Board meeting minutes looks to be like a lifetime. Registers looks to be like a lifetime. And under income tax act, you have a 6 year of maintenance requirement. So to that extent, you have to maintain. So that means companies continue to maintain, from the date of that liquidation to whatever that 6 year timeline is there, that has to be maintained in that way. We need to make sure that, that is maintained. And for me, as a liquidator, I assume it is a 8 years timeline given to us to maintain, any of the document, preserving the record somewhere in 39A or something, which says whatever the record we need to maintain. And I think in that it was a 8 year is what I remember to maintain.
The
And
regulation
so that
41 clearly says you have to maintain for 8 years of
8 years.
liquidation regulation.
Yes.
Refer regulation 41 of voluntary liquidation regulations.
Okay, okay, sir. Okay, noted, sir. Noted. Thank you. So there's one more question. There is some regulation and regulation number I'm not remembering exactly right now, that says that a liquidator is supposed to maintain certain records with the authority. There is one of it that is NESL. So, oh, sir, like, is the liquidator supposed to do it, sir?
No, it is not a mandatory, but to be on safer side, right? If there is a
Hmm.
lot of data, you can keep it in their safe custody instead of we keeping it, keep it to those authorities, who are meant for keeping those custody. That is better to keep it over there.
So, sir, like in your case, like have you done it? Because
Yes.
we are also trying to connect with NESL, but we are certainly facing some difficulty, some practical challenges
No,
in maintaining it.
I was signed up with a couple of co-working space companies. They have a kind of a store, sort of a services. I have, kept historical data with them, these file sort of things.
Okay, okay, sir. Okay, thank you.
And you can refer to regulation 41. It clearly says, what all are the things to be maintained, and, timeline, electronic way, all those things clearly are given there.
Yeah, I think electronic records 8 years and physical records 3 years.
Yeah.
Okay, okay. Thank you, thank you.
This is Shilpa Dikshit. Can I ask my query? Hello.
Yeah, please ask, madam.
Yeah, my query is pertaining to voluntary corporate voluntary liquidation account, wherein we are supposed to deposit the amounts which are unclaimed by the shareholders. So mine is the case where the shareholder is a foreign shareholder and they're not having a bank account outside India, or they're not able to open the bank account in India. So now I have come to the decision that I cannot keep my dissolution process just ongoing because they do not have the bank account. So I have advised them that I will transfer the amount to unclaimed to the corporate voluntary liquidation account. So my query is pertaining to TDS. If anyone of this group has done this, please kindly guide me or suggest me appropriately. whether I need to deduct the amount of TDS before transferring funds to the voluntary liquidation account, corporate voluntary liquidation account. Because in my case, the amount of TDS is on a higher side because the shareholders are, of course, the FEMA is applicable, and of course, the shareholders do not hold PAN and everything else because they are the foreign nationals.
Right. I have done, but in my case, there was no TDS was involved. It was just a bare equity which we were returning. If you see the regulation 39, Shilpa, it says
Yes.
Undistributed proceeds.
Right.
So in your case, it is a undistributed proceeds.
Right.
So I feel
No, it is undistributed and unclaimed as well. No, just a minute.
It says unclaimed dividends and undistributed proceeds.
Yes, yes, unclaimed proceeds.
In a way,
Yeah.
in a way, I'm not able to distribute, right? I have not distributed.
Right. I'm not distributed. Absolutely.
So I park entire money to that central government fund, that unclaimed amount.
Yes.
And from there, I think in the next process, when they actually pay to the shareholder, if they claim, I think
Right.
then the TDS may arise. Technically, it should not arise right now because I'm giving to the government fund. And even if
Yes.
I pay the TDS, for example, against whom I will give a credit to.
Yes, that is the thing. But in my case, sir, I'll just elaborate further. This is a case of returning of FDI, right? So, in future, if the because the stakeholders they have the shareholder they are mentioning that we are trying to open the account, and as soon as we will open the account, we will apply to you for the refund of that money. Now they are saying this for last 4 5 months, and this is really derailing the whole process. And so that's why I have come to this decision. So in future, if they come to me and claim this amount, at that time the FEMA gets applicable, and then we are supposed to file form 15CA or 15CB along with the outward remittance application and everything. So that's why I am a little bit worried and anticipating that probably I'll have to or take all these steps right now only, because in future, because the AD banks are also, my experience with AD banks as far as the foreign remittance outside India is concerned is very not, they're difficult because they are not conversant with each and everything, and they keep on insisting NCLT order, though then only we will pay the funds. So there are a lot of challenges. We need to convince them, we need to inform them, we need to provide explanations for all the regulations to them. So yeah.
I have one question addition to your question only, that whether if he is claiming that amount to you only because of non-opening of the bank account, and you are actually transferring this money to corporate account, instead of that you can extend your proceeding and you can hand over to them only. Why you are transferring this amount to government
Yes, sir.
account?
Sir, the thing is that this particular case is a very tricky one, because I started the process and I had given them these all requirements beforehand, obviously, that you need to have a bank account. They said, yes, yes, we have that. And thereafter, what they came up with the thing saying, okay, we will give you a dividend mandate and you transfer these funds to someone else who is a
No,
second
that's not
shareholder.
possible.
So that
That's not
is not
possible. You are
possible.
rightly said.
So what is happening is the process is getting really stalled. I may not be using the proper words, maybe, but so this is happening for last almost a year. The year will come to an end in next month. So what
That's fine.
happens
That's
is,
fine
so
because you have
we
a.
are yeah, that's right. But then we are required to make the expenses for audit report, then everything else, and I don't know, they're in a hurry to even get this voluntary liquidation done at the earliest. Probably they're having some other mergers or some plans going on. They're not transparent about that. So even they are insisting on
But
saying,
you can insist them to give you account, or you can
yes,
explain for at least one
I
time.
have done this. So after exploring all other the
Madam.
options,
Yeah,
yes, sir.
madam. You
Yes.
see, this Amendment Act now says with the shareholder consent, you can withdraw
Yes.
the dissolution, meaning withdraw this petition.
True.
Why don't you explore that option,
Sir,
because
I
you are
gave
not
this.
taking the money.
Yes, sir. I gave this option to them. I gave this option as well, that we can just stop the process. You find out a way out, because the money is substantial according to me. Uh, but they have said no, and they are just keep on saying, "Okay, please complete this at the earliest." So that's why
So
maybe I can say.
technically, if you transfer this fund to government account and then getting back, it will be your life will be more miserable because you have to handle two people, your stakeholder as well as government also.
No, no. Why?
Yes, I
Ideally,
completely understand, sir. But even I am not sure if they will be able to open the bank account. They do not have PAN. And they asked me whether we can open a bank account in India. I said, yes, you can, because in consultation with AD Bank only. And there is some requirement of opening of a FCNR account, but then they do not have PAN. There a lot of declarations are required from the foreign body corporate for opening a bank account in India. So the situation is quite tricky, and I am not sure when they will be able to really comply with our laws of land, and they'll have the bank account. So I'm taking this step. So my query is pertaining to TDS, because I'm worrying that in future, if I'm required to really make the outward remittance, and at that time, how am I going to comply with the FEMA regulations? And then deducting TDS, because the money will be parked with IBBI. So I mean, making the payment from those accounts, how to deal with such situation is a tricky question. So if any learned professional can guide me, or you can just
Yeah, madam.
advise.
Yeah,
Yes,
for
sir.
me, looks to be like if you pay to the government fund, no TDS because you are not distributing. And maybe if you can get a dissolution order quickly, then the shareholder has to deal with the government department directly. You are out of the picture. That's the only way I think you can come out of it.
Okay. Thank you, sir. Thanks a lot for your.
Shilpa ma'am,
Yes, sir.
one only additional point to this, and again one question to faculty. Additional point is, in this scenario, once you transfer, my experience is once you transfer the amount to that particular fund, you are going to receive a trail of emails from IBBI, wherein you need to give each and every explanation, justification. Again and again, that email comes in
Yes.
one of our cases. So that tune you are going to face definitely, because I faced in one of our case where remittance we did outside India, and then after that certain balance was remaining. So some
Okay.
673 rupees, and we requested the bank that that particular amount may be debited as bank charges also. As per
Right.
they were also not ready to cooperate. So the process stopped when I took actual NOC from the shareholders that okay, we know this has happened and we don't want to claim this amount. So only at that point of time, BI stopped sending the emails. So I was just answering a long trail. So that is a possibility where,
Uh,
while I
yeah.
also agree with one of the members who had said that if possible, stretch this process, give them the time, 90 days or 270 days, as the case maybe you will have to conduct the contributors meeting. And now the question to the faculty, sir, there is a provision. I believe I'll tell you the exact regulation, but there is a provision wherein they say that where the nature of asset is of pecuniary nature, pecuniary particulars. So in that case, contributories with their approval may, rather corporate debtor with the approval may dispose of in the manner they want. So my question here is whether with contributories meeting a resolution is passed and suppose that entity has a group entity in India. So instead of transferring, they given just an NOC that okay, we don't want the money. Like in case of dividend, it happens two
Repeated
order.
mandate, right?
So if that is transferred to some Indian company or group company, genuinely, so will that be possible? My question to faculty, sir.
Yeah, I have not seen Sandeep those cases, but technically, when I invested to my Indian company, I have a RBI reporting done that I will
Yes.
repatriate this particular fund. That's how I have been treated. And getting paid to the other group company may open the eyes of various, in a various way, why it has to be paid to the group company, why it cannot be
Yes.
repatriation. Because when I invested, I took it on a repatriation basis. So I personally feel it should not be, it is not allowed as a transaction per se. It has to go to the person who invested the money, because I am, paying to that particular person. If it is a joint investment or some other way, it could have been possible. Otherwise, I feel this is a transaction I should pay to the shareholder only directly, rather than paying to any group company in India.
Yes, sir, I agree completely.
But if he's giving waiver that, okay, we don't want, and group company, the money may be given, still it is violation?
I feel, sir, yes.
Okay.
Because without a clarity, how, why to get into that kind of a
I
transaction?
did small research on that. There may be a tax implication. So GST in tax, they are ready to pay. But I was concerned whether this is allowed or not. I
Yeah.
respect your views. I have
Yeah,
not
yeah.
taken
And
a
also
decision on that.
view is a larger picture, right? Because it's a money trail. I don't know whether it can come under FEMA in a different way.
Yes.
Okay.
Sir, in one case, one company was holding 99.9 share percentage of shares, and other shareholder was holding just one share. And that company did not have a bank account. And so they gave an NOC that their share may be paid to the majority shareholders. So, and I have done this, and I have submitted before the NCLT, and I have also obtained a dissolution order.
Yeah, that should be okay. And
But
also
that was just one share. They were the shareholders holding just one share. And they gave NOC to be so that the amount can be transferred to the majority shareholder.
Yes. And also we have the
Madam, this is,
beneficial interest concept, right?
but
Registered
madam, this
owner.
must be, sorry, sir. So, madam, this must be the case where the outward remittance was not involved, right?
It was involved.
Okay, because
The other
mine is
shareholder was the foreign shareholder.
okay. So
Yes.
mine is the exact opposite case. The 99% shareholding company is saying that you pay money to the 1% shareholder, and that I have tried that route as well, and bank has denied that.
Madam, you can't do the transfer of shares.
They are not ready because some tax implications are involved. I have given that option to them as well, but they said that there is a lot of tax implications involved.
Sir, I have two questions.
One
Sir,
second, sir.
sir, just an extension to what they just said. So, for example, if there is a shareholder holding just one share, so instead of transferring to the other shareholder, shouldn't it be transferred to the corporate voluntary liquidation account under Regulation 39? Because that is not claimed by the shareholder, and I mean, we can't pay, or instead of transferring it to someone else, which is a concept of unjust enrichment of the other shareholder. Shouldn't it
Sir,
be?
yeah, that is possible. But in this case, what they are facing is client is, or a shareholder is saying, I will give you the bank account details, in 2 months, 3 months sort of things. And they are just buying the time. And if they transfer to that account, the worry is there may be a lot of emails or a follow from IBBI later. And also, if the dissolution does not happen, before they claim, again, the insolvency professional need to work with IBBI, get the money back, then again do all that paperwork. So work increases.
Yes.
Okay.
Madam, also, please check one more time, or the other possibility. See this, whatever profit and loss account balance is there, right? For that,
Yes.
you can issue a bonus share. Of course, subject to taxation and other angle. If you see the Companies Act, it says with the shareholder approval, you can issue a bonus share. Is there any
But
way
sir,
you can
in this case, once we have starting the voluntary liquidation, will it be possible to go ahead with such issue of bonus shares? And
I don't think so, because liquidator is empowered to go for a capital increase.
yes,
Capital increase, not even share transfers. I don't know, say even share transfers, blah blah.
share transfers is there are certain case laws, particularly in case of liquidation. I have not seen for voluntary liquidation, but in liquidation, transfers are approved by the liquidators and it is allowed. So,
Yes.
going by that logic, it should be allowed in voluntary liquidation, and particularly in such cases where we are stuck up and we want to move ahead legally.
Sir, I have one question. Whether we require the voluntary liquidator is required to file the income tax return if suppose the liquidation has commenced on February and it is going to be completed in the month of May or June. So, or for a shorter period that voluntary liquidation is completed. So, should we require, sir?
Sir, technically no, but income tax department says any delay in return filing 5,000 rupees. And
Right.
also, I'm not sure from February to March or during the financial year if they have had any income or any transaction as such. If there was any income, whether they were under liquidation or not, then ITR filing will come into picture. Otherwise, if meaning suppose liquidation was started, company was nothing, no transaction, nothing, and dissolution is also filed pending with NCLT, then generally we won't file any ITR, sir, in such cases.
I
We just
think
go for a PAN surrender. But having said that, I practice, earlier I not used to do it. Now I'm started doing filing the ITR also. Unnecessarily, there will be some 5,000 rupees demand.
Right.
Yes, sir.
Suppose it is in the month of, you say it's in September and completed on December. So for that period also we require to file.
But sir, April to September, you might have done some transactions, sir.
Yeah.
So that logic, yes, ITR comes.
But sir, date is not there, na?
It is, sir. It is the thing that the liquidation process has been completed. Now the schema come on in the month of June or July, like that only. After the completion of liquidation, we require. And in case of we are filing the return, then again comes to that audit, getting the accounts audited. Will be required to get the accounts audited for that period.
Sir,
That financial year.
Sir, audited anyhow you do for a liquidation period, signed by your auditor will be there, available over there.
That is for the liquidation period, right?
Liquidation period.
Right.
And otherwise, you need to give this financial statement as an ITR, may not be audited, and file the return. Because when you went for a dissolution order, then you have to surrender the PAN and TAN.
Right, right,
When you go for surrendering, then you may have a challenges.
right.
Sir, I do have also few questions relating the assignment I am doing right now. So first questions, as is already been discussed in the starting of the webinar, that if claim is not received within the 30 days or within the time, we can automatically reject that claim and proceed with the filing and everything. But supposingly we already have made advertisement and any intimation or someone is received from the department that they are in the process of scrutiny of the document. So, and the final claim received after 4 or 5 months, will it be considered received within the time or after the time limit?
Madam, answer is same. Meaning, if you see the Income Tax Act very clear, I have to intimate, and they have to submit a claim, or they have to tell that, till such time don't pay or something like that, some intimation. Suppose if
Yes.
they have returned to you in that way, then yeah, legally, yes, they are correct. You have to accept their claim, and you cannot distribute till they say, this process should not be get over. If you don't have a such kind of a specific communication,
Okay.
and you don't have a claim with you, then you can always reject their claim.
Okay. And sir, my another question is, if that in Regulation 41, it is mentioned that the liquidator has to maintain the documents in electronic form for 8 years and physical form for 3 years. So, sir, actually, I'm also trying to get this resolved from the NESL, but unable to get unable to get things. So, is there any way out or any storage facility available where we can have the access for that to maintain the documentation?
Yeah, madam, I have also faced this problem. I tried many times with, NSEL, all those people to, store the data. That didn't work. I've approached a couple of co-working spaces. They have a storage services. So if you can identify them, especially for a box or a manual files, right? You can sign
Yeah,
up an
exactly.
agreement with them and give it to them for a safe custody. Online, maybe you can buy some space, a cloud-based software provider, you can store it till you are able to reach out to NSCL or in some vendor. Maybe I will pull out some contact whom I am working with. I will send it to you, madam.
Okay.
Sir, two questions.
Having
Two
another, I
request,
do
sir.
have two questions.
Sir, please.
May I continue with the same?
Sir, two questions from my side, sir, please.
Hello.
Yes, madam. Please.
Shall I continue with the another questions I have?
Madam, yes, please.
Yes, sir. Sir, another question which I have, like in the regulation, it is mentioned that if there there is any time contributors meeting held, we have to file the status report with the IBBI within 7 days. But it is nowhere mentioned either through email or via speed post. So for the safer side, what we are doing, we're filing it through email or speed post both. But if any case we missed out to share the same report with the speed post to the IBBI, will it be considered as non-compliance?
Madam, you have that VL4 or a VL2
VL2, sir.
form
It is
filing is there.
VL2. It is VL2 to be filed.
VL2 is a form filing requirement that is different from the in different regulation. And the report which we need to share is in regulation 37 sub-regulation 4, where they are mentioning that we have to submit those report to the IBBI within 7 days without mentioning it either through email or speed post. No way of communication is there.
No,
No,
madam, if you see, IBB had given one circular or something where
Yes.
any final petition, all such copy to be given to one designated email ID. For the same email ID, you send a status report also, madam.
Okay, and through speed post also we have to do the same.
I'm following only email method. I'm sending over a email. It is there in the circular, madam.
Okay, sir. Sir, another question is like if there is more than one contributors meeting, so we have to file those VL2 form again for every meeting.
Yes, madam.
And supposing in one of my case, I have filed the VL2 for second of my contributors meeting, but in IBBI dashboard portal it is not available, or the second form is not reflecting there. Although while doing that, I received the pop-up over the window that the form has already been form has submitted. But post that I am tracing that, but the form is not available. So is there any way out to find that or request them IBBI to get this issue resolved?
Madam, when VL form was introduced and subsequently lot of challenges were faced by the professionals, IBB had done a lot of sessions, to face all those issues and all. Maybe you could have, raised the issue during that time. If not, maybe you have to reach out to the ICICI tech team and see what can be done, madam. You have to write to them in the website. You will find contact details. You can write to them, and also their number is available.
Okay, sir. Thank you so much.
Okay, sir, two
Sir,
questions.
there is another query.
Sir.
Hello. Sir, there is a... Sir, I'm audible. Hello.
Yes, madam.
The
Please
query
speak.
is... Yes, sir. Sir, my query is, after distribution of proceeds to the shareholders, we have to file an application to the NCLT. So, before filing that application to NCLT, is there any form which is we required to submit to the ROC also?
Madam, generally, one is final report we have to file with ROC in that GNL form. And also the petition also you have to serve it to the ROC. Manually also you can submit at the counter, and also we file the form also, GNL.
So before making the final application to the NCLT, we have to file with the ROC.
No, madam, sorry. One is you make a final report, right? Final report says all assets and liabilities are disposed of. That report you have to file with ROC. After that, ROC and IBB, and after that, you will prepare a petition for dissolution, correct?
Okay.
That petition also gets filed with ROC manually and online form, and of course with bench.
Okay, sir. Okay.
Sir,
Thank you, sir.
Sir, I just have one question. Here, the shareholders and directors both are NRI and foreign citizens as of the current date. But all the residents or citizen, as per the MCA records, they are Indian. So whether the distribution of proceeds of voluntary liquidation requires the filing of form FCGPR or FCTRS or any other RBI compliances, sir?
Madam, first please check who was a resident director.
Okay.
For the compliance of the Companies Act. Madam, can you
Okay, sir.
So please check.
Okay, is there any other RBI compliances we have to do after the distribution of proceeds?
No, madam, please
voluntary
check whether
liquidation?
they are, when they invested, they were a NRI or a restaurant,
Okay.
how they hold the shares.
Okay.
Based on that, you have to take a call whether it has to be repatriated to outside or
Okay.
paid to the Indian account.
Okay, sir. Okay. We'll check.
And second, you have to check who is the resident director for the
Okay.
compliance of company plan, if they are non-resident.
Okay. Okay, sir.
Okay.
Sir, is there any provision that if a voluntary liquidation under Companies Act of 1956 is going on and the liquidator has, unfortunately passed away, so can that be transferred under this IBC, under voluntary liquidation under IBC? Can that case, is it possible to transfer that case under IBC?
I
There
doubt
is no
so.
voluntary
because-
liquidation under 1956
Yeah,
Act.
correct.
There is no voluntary liquidation concept.
Yes. Maybe that is, he may be saying that member dissolution.
Members, voluntary liquidation by members.
A member. So first it
Members.
depends, because back then it was with the official liquidator and all, with the High Court.
Yes.
The old act. And
Yes.
we need to see the transition provision under IBC. So those who are cases certain are, referred back to the bench, on NCLT. I doubt voluntary liquidation has any transition provision like that.
Because 2013, I know they have removed all that, because under 2013 Act, it has to be through IBC only.
No, there is a transition provision. And
Yes.
also, I remember some guidelines or a circular to that effect. And
Yes.
as per my memory, voluntary liquidation were not in that transition provision. Or there was no concept of voluntary liquidation back then, right? Member dissolution. So need to check, sir. I'm not sure. As per me, not possible. Need to refer to the law.
Sir, I have one query regarding one of my assignment where I have made a realization of investment made in mutual funds. Now there is capital gain on my on the investment which has been realized. So how to deal with it during the liquidation period?
So like any other company, you have to pay now this capital gain taxes, right? And also you have to file the ITR of the company.
Sorry, sir, please come again.
Sir, you consider this as an active company for this particular case, as if
Yes.
like an active company. Like any other company, how we do a computation, right? For the mutual
Right.
fund, pay the capital gain tax from the company, and you need to file the return also accordingly.
So during the financial year 26-27, this process will be getting over. Now, since you have as you have mentioned that I need to file the ITR, so I will have to hold this process until next year.
Sir, see, sir, one is you can go ahead and pay the tax. There is no doubt on that, correct?
Right.
So only filing the return will be pending.
Right.
You will issue the form with the note that this filing return is pending because of this reason. And
Right.
you will continue to file the petition, everything with the bench. And
So-
dissolution order may or may not come within that time, and you will obligated to file the ITR. You file the ITR, then file for surrender of PAN and TAN.
So you are what you are suggesting, sir, that I need to once the process is over, I will file an application for dissolution, giving the detail that for the very reason the ITR filing is pending. Now it is up to, since the bench normally ask for surrender of PAN and TAN, as we understand from the processes which are going on. So the dissolution order will not come from the bench.
Sir, I doubt. Meaning they may give a direction to file this return and pass a order. Generally, PAN and surrender happens after dissolution order comes.
Okay.
Or till then, bench may say, ITR give the acknowledgement, then they will pass the order. I'm not sure how they will take a stand in this case.
So best solution to this situation is to, once the process is done, we need to make an application highlighting the issue which is being faced for the dissolution.
Correct.
Thank you.
My question is, since there are lots of work to be done after dissolution also, like filing of ITR or legal expenses would also be there. So where should we park that amount, in director's account or in our account? Where it should be parked for future expenses? estimated future expenses.
Okay, sir, please see the resolution of your appointment. Apart from a professional fee, you have any government fee or anything to be reimbursed for that? Any government fee related to that, you can get it reimbursed and take it to your account. If not, if you have appointed any consultant to do anything, maybe you can pay to the consultant.
I think one challenge here, Mr. Bhatt, see in the final report we have to give a payment and receipts. Ideally, what we are following is we are estimating the expenses. Even a legal counsel fee also we are taking the quote in advance, and on the basis we are paying off to him. And likewise the storage charges for the documents and all. We are taking a quotation, and then wherever we are not incurring, maybe we are transferring to our accounts. Otherwise, all the expenses which are clear, we are incurring before the resolution and incorporating in the final report as under payments and receipts and filing with IBBA and also
So,
NCLT.
so the money should be kept in our account or transferred to the vendor before taking its service.
See, ideally, if the vendor services is for continue, even after dissolution, it is complete, it is continuous for a period of time. That is only in case of storage documents. Otherwise, it's only one time, right? Like a council fee. You may
Right.
a council may appear, and once the resolution over, order is done, is over. So you might as well you keep in our account or transfer it to him, and provide in, because you have to provide in the receipts and payments in the final report, and which has to
Right.
be duly audited with an auditor, and you have to attach the certificate of the auditor along with the final report.
Okay. Thank you.
Any other questions?
So can
I
we
had one.
just surrender ESI
I have one
and
input. Just give here. Somebody was asking about the transfer of proceedings. I think no 11th schedule of IBC itself provides for transfer of all the proceedings, and it has amended section 434 of the Companies Act that all the existing voluntary liquidation and winding up proceeding gets automatically stand transferred to tribunal NCLT.
Come again, sir. Come again.
No, all the existing liquidation proceedings prior to IBC gets transferred to tribunal from High Court as per section 434 of the Companies Act. This was amendment by virtue of the IBC itself. Under 11th schedule of IBC code, if you see, this provision is there.
This is related to Companies Act 2013.
Yeah. Yes, obviously, yes. Even Companies Act 2013. 434 was amended by through IBC code itself. Section 434 of the Companies Act got amended.
Yes. But my question was related to liquidator appointed under the Companies Act of 1956, not 2013. 2013, so I know that everything has gone to NCLT.
I have a different view. In those companies, who have taken all the effective step and in the verge of closing under that particular section, erstwhile Companies Act, that liquidation is still going on and it will continue. That is number one. And number two, the gentleman who has referred that in case the under the old Companies Act, the particular liquidator is expired. In that situation, the NCLT has a power to appoint any other liquidator with the or they may ask the they may ask the direction to hold a meeting of the shareholders and appoint another liquidator. That is my view.
Okay.
Even today also under the Companies Act, under section 272, there is a provision of liquidation and winding up on just an equitable ground. So no doubt most of the cases where it refers to section 9 or 10 or 7, all are in the IBC. But even though the Companies Act 272 is still exist, and it is cases are coming up.
In my case, there is a matter still pending in voluntary liquidation because of appeal filed by the company with CIT appeals. And CIT appeal as of now is faceless. Like, you do not know who is the officer to whom you have to meet. And these cases are pending for considerable period of time. So is there any solution to this, to how to end this? Because the waiting game appears to be endless.
It's a big challenge.
It's a huge challenge, It is
because it's a faceless.
faceless, so
Nobody
NFAC,
can do anything.
you do not know who is the officer, so you can't even meet
Absolutely.
anyone. And you
Absolutely.
can't address. You can keep on addressing your assessing officer or even the principal commissioner of income tax. You can meet, but they are all helpless. They will say, "We do
Yes.
not know who is the officer who will take up your case. We do not know." So you can keep only requesting or sending your applications that please hear us out, But it is endless. It is just waiting game.
I did it in one case, but it is a different case, not, but in income tax, I made him a party and filed the interrogative application with NCLT. In that case, income tax officer had to come to the table, matlab, to appear before the NCLT and expedite my matter because there was a pending gratuity fund which is to be transferred in the liquidation account, and there was nobody. Company has already settled everybody. So under the circumstances, I wanted to have because LIC is asking that if unless and until you take the approval of income tax, we will not release.
Yes.
And income tax somehow, after you can say more than 10 to 15 attempts also, there was no cooperation. In that case, I have filed a case with NCLT interrogative application and made him a party.
But there too, you knew that who is the assessing officer, na?
Yes.
In case of NFAC, you do not know who is the person.
But let the income tax department answer to that. No, why we should, worry? I think we should file with the NCLT the application. Let the income tax commissioner appear or ITO appear and inform the, judge, bench of member that this is the situation. Because, if the matter is prolonged for years together and there is no hearing, how liquidation will come to an end?
Correct. And also, sir, under IBC, you have a provision, right? Somebody is not cooperating with you. Maybe that is another angle to look into it.
The member will say it is other than the statutory authority.
You cannot say that, no, sir. It is very difficult to say that the government department is not cooperating with you.
No, but what to do when I'm
you have to file, you have to inform, you have no other choice. How long you will beg to the income tax authority, please give us an order or, complete the assessment, complete that. How long you will do it?
Yeah.
And one side, IBBI is so strict. You have to complete in this many period. Every day there will be a notification. You need this information by end of this day. And and when it comes to their obligation, it's like it is always advisory. Nothing is compulsory. Nothing is applicable to them. So it's not a happy situation.
Not at all. Not at all. It's tough. And not that the assessing officer or I have met even the principal CIT, principal commissioner of income tax, but he also says that he is helpless. Like, I can only forward your application the way official channels move. That's all.
Chalo. Something will come out. But somebody have to try. Somebody have to try. Kind of.
I'm told, yes, things may move. Like, sooner or later they have to hear out. It's not that they can keep it endlessly. Although there is no time limit. That is the unfortunate part. For CIT appeal, there is no time limit.
But then there may be some kind of a mechanism worked out. Okay, pending that, you complete the rest of the things or something like that. And then, because You can't keep the matter hanging for years together. I am having one case where the CIT appeal is pending for more than 5 years. There is no hearing. They forget about it. There is no hearing. If there is any additional submission or anything is required, I can understand. And if I have not done it, that is understandable. But if there is no hearing at all, what do you do?
I have already given at least 2 or 3 written submissions. They will say that some, computer-generated mail will come, and they will say that notices will come, and they say, okay, you file your written submissions. And at least 2 or 3 times written submissions have already been filed in last 4 or 5 years, whatever it is, the period through which the CIT appeal matter is pending.
Right, sir.
Fine,
Any
sir.
other questions?
Right. Thank you.
Thank you.
And
Thank you.
Questions, madam, maybe we can wind up.
Yeah, thank you, Vighneshwar Ji. Thank you so much. I think
Thank you for the nice presentation.
Your presentation was excellent and very enlightening, no doubt, and very knowledgeable. Thank you. Thank you so much.
Thank you, everyone. Thanks a lot.
Thank you.
Yeah, everyone. Bye.
Thank you very much, sir.
Thanks a lot, everybody.
Yeah, I think that's all. Thank you. Somebody from the institute was wanting to speak. ICSI.
Anjali is there, sir.
Yes, sir, I'm here.
Yeah, Anjali, I think you can close formally.
Vignesh, can you share the PPTs?
Yeah, please,
Yeah,
ma'am, please share the PPTs and also the attendance, send it on our mail.
Share by tomorrow morning.
Yeah, attendance and PPTs, please send it on mail so that we can claim the CPRs.
Fees, actually, IBBI is searching for the fees also, fees proof.
Yes, sir.
No, that is not required, sir. Attendance itself, the fees paying either invoice or mail sent by the ICSA.
No, sir.
Either of
Invoice.
is
Sir, I have more than a dozen times where I paid and I have a receipt, but I didn't get credit hours. No, you have to have a attendance confirmation.
Okay. Thank you. Thanks all.
Thank you so much.
Sure.